following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by Ninjatrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.
Good morning, everybody. Welcome to Ninjatrader Live. My name is Jim Cagnina. It is November 25th, 2024. Happy Monday, everybody. Joining me live from Long Island, New York, the incomparable Tom Schneider, CMT. Tom, good morning.
Good morning, Jim. How you doing?
Pretty good. How's your weekend?
My weekend was really good, actually. Had the daughter back from college and got to spend some time with her. And yeah, just great weather. Got a lot of little things that needed to be done in all different areas. So it was great. How about you?
It was horrific.
Uh-oh.
Indiana got smoked by the Ohio State. Oh, man.
Yeah, that was a tough one for Indiana fans, for sure.
I know. Oh, well. I mean, you know, that was expected outcome. So I'm over it. I'm good now. Generally speaking, though, it was a good, relaxing weekend.
Very good.
Yeah. So, but today's like this is a shortened week, right? We have a holiday this week.
We do in the U.S. We have the Thanksgiving holiday. So Thursday, no show, no live stream because there's no trading. Consult the website, though, to see when the futures market is open for the asset class you trade because they do open and close at different times. But generally speaking, the underlying markets are closed on Thursday. And so what that does to some of our news that comes out, we have a regular set of news that comes out on Thursday. We have the EIA natural gas report. We have jobless claims. USDA has some reports. So those get pushed around. But yeah, that's what's happening this week.
Yeah, for sure. But we're ready to go. We could do some work for at least 3 days, right? Before we start eating turkey.
Yeah, I think that's correct, Jim. Maybe we take a look and see what is coming up today. We've already had some news, right?
Yeah.
So today we had 8:30, we had the Chicago Fed National Activity Index, and that was a bit of a miss. I don't know if a bit is underselling it a little bit, but it came in at negative 0.4, forecast to be negative 0.2. So it was expected to tick up from the previous month of negative 0.28. Came in the other way. And Jim, you have a comment about that.
Yeah, so the Chicago National Activity Index has been kind of inching down for a while now. And it's a diffusion index, but it's not a diffusion index around zero. It's around negative 0.35. So when you have a print, at minus 0.35, it's neutral, right? Above it, it's expansionary. Below it, it's contractionary, and maybe even suggesting, hey, maybe there's going to be a recession sooner than later. So this was the first tick below that 0.35 level, but the trend has certainly been down on this for several readings now on this one. So, I'm not worried about it, but it's something to think about.
Yeah, and that demarcation line being negative 3.5, who thought that up? That seems kind of crazy.
Well, I had to read it again this morning because I was like, wait a second, this one's a little different than the other ones. And if you go to the website, if you go to the Chicago Fed's website, they actually have subcategories and a lot of good detailed information there. I mean, they use 85 different economic indicators to create this index, which is, there's a lot of data going into the index. So it's kind of a global macro stew, if you will. It's like, all right, let's get all the leftovers in the fridge. Let's throw them in a thing of water. Let's boil that water. Let's mix it up, and we're gonna have a stew. That's kind of like this one, right? But it's meaningful enough to take a peek.
Yeah, there's probably some weightings going on too that skew it to that negative 3.5. Um,
Yeah.
so that was what we've seen so far today. Now we do have a couple other things. We have the Dallas Fed Manufacturing Survey later this morning, export inspections and crop progress, USDA reports. But really, those two Dallas Fed and Chicago Fed reports are really the only thing happening from a known news aspect. But I'm sure, with these times where we're kind of in flux, in transition, there might be unknown news coming out too.
Yeah, for sure, for sure. So I think over the weekend, generally speaking, time it was kind of all right. There was no, you know, bombshells, no pun intended, that were out of, it seemed like a quiet, calm weekend.
Yeah, for sure.
All right, all right. Let's take a look at some charts here. We have the equities are catching a bid big time. We have a big gap here. Let me just start off with the E-mini S&P, even though I got the Russell up there. I was just moving stuff around. E-mini S&P is gapped up here. Nice gap. We're at up 41 and a half so far. I'm getting close to that target wick where my turnaround doji is approximately 60, 52 and 3/4. Whatever is causing this time, this is looking for places to buy S&P.
Yeah, for sure. I mean, this is we talked about gaps last week on the Friday
Yeah.
live stream, and I think this is a true kind of breakaway gap. Market might want to fill it, but maybe not today, right? Unless something changes, perspective changes. This is looking very bullish. I think your turnaround doji right there that you pointed out, I think
Yeah.
that is definitely a target. That if we can get above there in the next, well, let's say during this week, it might be a better sign that we won't fill the gap. However, just remember that this is kind of a light week.
Yeah, kind of a light. It'll probably be a light week on volume too. Right now we have
Yeah.
166,000 so far overnight trading the E-mini S&P. I'd expect that lightness to continue going all the way until Monday. And that, in some, as Sterling said last week, maybe all the way through Christmas. I don't know, but my experience is we'll get some activity first couple of weeks in December. So I'm not ready to
Sure.
say, all right, we're done for the year. Let's go take a nap. We're not there yet.
No, not at all.
Does anybody take naps anymore, Tom?
Not in this house. Well, actually, we do have somebody visiting who takes a lot of naps, actually.
Oh, there you go. You have your father-in-law, right?
I do. I do.
There you go. Yeah, that's he deserves it.
He's
That's
earned
all
it
I'm gonna say.
for sure.
He's earned it. There we go. All right, Nasdaq right here. Nasdaq, same thing. Gap up, rally up 0.76% so far overnight. Moving averages all starting to arc up again. 821.50. We have RSI is lukewarm at 58, and we're climbing.
Yeah, I mean, I'd be interested to see, Jim, if you took a ray and you connected those two um, all-time high, those two bars right almost next to each other. Yeah, right there. So we're breaking up above there. Now that's not a great resistant trend line because we had that big move down and then we're slowly climbing up. So it's probably not as important, but we can keep it up there and see if this market holds today. You can imagine, exuberance today with some of the news over the weekend with, one thing we didn't talk about was this Treasury Secretary pick Besant seems to be what's lifting this market. If the bloom comes off the rose a little bit, we might see that close underneath that trend line, and then we'll see if it's resilient.
Yeah, Bessent's a local boy here from the Charleston area.
That's right.
There you go. But he's also like a Soros guy. So I don't know what that. I don't
Well,
know. It's like, is a conspiracy theory really a conspiracy, or is it just that I don't know. We could talk about this another time. But in any event, yeah, this market seems to like it. You pointed out the yield, though. Let's just bounce over there really quickly, Tom. You pointed this out to me. The yield curve now between the 2 and 10 is starting to converge.
yeah, so we're about 2 basis points separated between the 10-year yield and the 2-year yield. We're in normal it's kind of like we got back to a normal environment. We got uninverted after being inverted for the longest time, I think. Maybe not ever, but pretty close to one of the longest streaks we've ever seen. A week ago, we were 15 basis points separated, and now we're 2. So this is kind of heading in the wrong direction. I like to think of an inversion as kind of that territory where good news is bad news is good news. And since we've reinverted, we haven't seen that effect too much.
Mm-mm.
We got that negative Chicago Fed activity index print, and the market reacted positively. Um, I don't know if it's related. There might be something else going on, but that's the only thing I could see that might have moved that market up. And so this is telling me, like, maybe we're going to be inverted again.
Yeah, and the actual underlying treasuries here, they're all up on the day. The 30-year bond is up over 1%, which is pretty good. The ultra bond is up over 1.5%. So, and we'll take a look. Let's just take a look at that chart now. We'll go back to the stock index futures. Apologize, folks, for being out of order a little bit, but let's do it anyway. Yeah, so we're catching a bit off the bottom here, Tom, and we had those speed lines that we drew last week. A lot of potential room on the upside here. I want to figure out why this is happening, and once we do, I'm looking for places to buy.
Yeah, this is looking like kind of a bottoming pattern, a rounding pattern that is in the process of turning around.
Yeah.
But it also could be a consolidation pattern, right? You've got the minor consolidation there, but I look back to, yeah, exactly, right there, right around there. That's another level we have to get through, and we could get up to that resistance area and just hang out there for a while. So maybe it's not exactly a bottoming formation that reverses
Mhm.
and see higher heights, but let's prove it to me by getting above that second resistant rectangle.
Yeah. Yeah. All right. All right. Well, we're moving on up. Let's keep moving. Let's go back to the stock index futures. Let's reach around and get the Dow up here. Dow is up almost 400, are these all-time highs, Tom? Do we know?
I believe they are.
Crazy.
Yeah.
The Dow's digging it. The Dow is digging lower taxes, tariffs, and everything else. This is, again, a little bit a much smaller gap here, but a gap nonetheless. I'm going to leave my fib anchored the way the fib is anchored, and we'll see what happens on these negative fib numbers, harmonics. And this RSI is a little more aggressive, Tom. It's at 67. It's close to 70.
Yeah, this momentum, it's a quick ascent, right? Since Thursday, we've got these big 3 candles, and you might want to call them 3 white soldiers, but they're kind of already in an uptrend. I mean, it was in a slight pullback, and then you got them. So maybe,
Yeah.
it's kind of one of those gray areas, but whatever it is, doesn't really matter. It's bullish. So we'll see if that continues. I'm not looking for places to sell here either. I'm looking for places to buy maybe on a pullback and intraday anyway. Um, yeah, I can't say much
Yeah.
more than that. It's bullish.
No wick at the top. I mean, that thing's going. Russell's up 1.32% right now. The same gap up. We're about to take out this target at the top here. I'm going to go ahead and highlight that with a rectangle, suggesting possible resistance here. We'll see if we can break through it or not. And then we're also at a 68 RSI.
Yeah, looking very similar. Just hasn't taken out those recent highs. I won't say all-time highs. I don't believe they are. They could be. We'd have to go
No,
back,
I
I
don't
think,
think
to
so. Yeah.
2021. Well, I think it was 2442 or something,
Oh,
2642.
okay. All right.
We'd have to check. It's 3 years ago, man. I can't remember that far back, but I think it's the same, systematically the same. We'll watch out for that gap, see if it might want to get closed.
I can't remember 30 minutes ago. All right, crude oil is getting, according to Carlos, we're stuck here. Let's go up to the January crude oil contract right now. Carlos was suggesting strong rejection at 71.55. Wow, this is a bearish engulfing candle, big time here, Tom, in crude oil.
Yeah, yeah, bearish engulfing right back to your 8 period and your 21 period moving averages, which is really interesting when that happens, right? Because the news that came out today was Netanyahu was um, accepting, I think, the principle of the peace. What is it? The offering,
What?
whatever it is, the treaty
Yeah,
that was put in front of him,
yeah,
the agreement, whatever you want to call it. So in principle, he okayed it, but there are many details probably have to be worked out. But that's very bearish for crude, right? So good news for us, good news for people of the world, and then bearish for crude, which again, you could say good for
yeah.
the rest of the world.
But I like the word peace in
Yes,
there. That's good. Yeah.
yes,
Anyway, yeah, sold off big. This is a huge, huge sell off here. And Carlos is right. I mean, we have a lot of we had a lot of resistance up here around 71.50. Let's keep rolling. Gold. Now talk about risk on, risk off. Let's talk about that for a second. I mean, if we're risk on, look at gold. Gold, another bearish engulfing, and that. Let me fix all these fib lines. I mean, this isn't this is major. This is a major sell-off right now. We're hitting those moving averages, which are going sideways right here. We broke that 50 level on the RSI. This, you know, looking for places to sell. That's my bias today.
So, Jim, we have the guess the close contest that people entered for
Yeah,
the end of the year gold price, and this is something that was looking pretty good. Of course, it's too far away to say hey, this is it for me, but
yeah.
today the high in gold was three handles away from Mike's guess. I mean,
Well,
he was right there.
my 24th 63 is looking really good right now if this continues.
It is. It is. Today it turned around, and I think it's heading towards our guesses. We'll see this volatility the rest of the year, I assure you. But this is looking like crude. This is a bearish engulfing right to that 8 period moving average. And,
Yeah.
you know, unlike crude, it really hasn't seen a little bit of lift off of there. So I could see us getting down to where, I don't know. I mean, you got 2,600 as a Mike likes to look at 20 point increments. So there's 2640, 2620, 2600. But I'm just entering the cloud. I'm not seeing much more support than just some natural numbers.
Yeah, no, I hear you. And my crosshairs is about down there. I have a 37.5 harmonic though, which is in a way at 2640. So I'm going to use that as a guide. And I don't even know what this old rectangle is. I'm going to delete it. Oh boy, crazy, crazy, huh? Anyway,
Yeah.
it's like someone snapped their fingers and said, "Okay, we're gonna be risk on today. Stop messing around." And boom, everything just exploded. U.S. dollar's weaker across the board. Let's look at the Bitcoin. This has been an interesting phenomenon right here. We're still in November, folks. We're still in the November of Bitcoin. We have 33,000 contracts traded already. The next one, December, only has 2,400. Go with the one that's more liquid. Let's pop it up. And a little bit of a stall. I would redo my retracement at this point, and I'll do that while I get your opinion on this chart.
Yeah. I mean, look, we hit a psychological number. What's the high from Friday, right?
Yeah.
The high was over 100,000. It was 145. So sometimes you see when you hit those psychological numbers, the market pulls back. But
Yeah.
I don't expect that pullback to be um, necessarily the top is in for a long time. Um, I want to see, I like your trend channel there. I want to see that bottom trend line broken to say, hey, you know what, this might be a longer term pullback, or we're going to pull back to the 8. We're going to pull back to the 21. We're going to pull back to Jim's rectangle at 37 and a half retracement. So, those are all within play, within reason,
Yeah.
and you could still be bullish overall on Bitcoin.
Yeah. And what was your monthly patterns? Didn't you and Mike came up with some monthly patterns that was pretty compelling.
So beginning of the month, so starting next week, we'd start to look for a pullback.
Okay.
Right now, maybe it isn't always about lining up with the month. You've got a light week this week, you've got a holiday week that leads into the next month. Maybe the pullback starts this week, but then after the pullback, we see a big move almost for the rest of the month. So if kind of instead of the end of the month, it's Thursday's holiday makes it a de facto end of the month. Um, we might see this happen a little earlier, but it's been consistent since I think June or July that we've seen this pattern.
Yeah. Yeah, and the other thing that goes through my head when I think about risk on, it's like, all right, folks who've been long Bitcoin since 70,000 right now might be like, all right, I want to take some money out of this market and I want to move it into equities. Equities are exploding. Could be just a real allocation of investment money too. So, the cash 100,000, I don't think ever happened. I'd have to double check, but maybe it did. I didn't see that headline
Over
that the
the week.
cash Bitcoin hit 100,000.
Right, right. That's a very good point.
So, any event, maybe there'll be a move afoot. Right now, we're in the trend channel here. I'm going to be open-minded on the Bitcoin today.
I agree.
Tom, let's get some currency. Well, we'll do currencies and let's do nat gas first since it's on my screen here. Here's a naked nat gas chart. Huge rally then we had a bearish engulfing and then we popped back up. So profit takers did their thing, and then boom, we're all the way back up here with the doji at a relatively high net gas level.
This is kind of an amazing chart, right? You look at those two candles. Friday's candle, we closed all the way down at, what is that? About 315, right? And now you're telling me we opened 30 cents higher,
yeah,
10% higher.
Yeah.
That's a pretty big deal.
Yeah.
Usually if you see this formation in terms of the bodies, you usually see, let's say, that big red candle would be green because that makes sense, right? Path of least resistance. But no, this is what happens sometimes over the weekend. You have big moves up, and again, this could be weather related, right? Oh, the reality of a cold winter might be coming in.
Well, that's what Sterling suggested last week. Sterling's going to be back in an hour or two with us, and we'll ask him again. But yeah, that was one of his implications.
Yeah. So anyway, yeah. Look, I mean, this is certainly, I think, bullish. Even though we have kind of a red body or small red body or doji, this is looking bullish. The one thing I would be concerned about is if we can't take out Friday's high, it might be a little bit of a peak and then see some pullback tomorrow.
Roger that. Let's shoot over to the Euro FX. Wow, this is pretty bad. I mean, this is not bad, but it's the dollar now is trying to, it's still an inside bar, but trying to, it was weaker against the Euro FX. The Euro FX is in a pretty steep free fall here. It trended pretty nicely. Ignore all of these drawing tools, by the way. And right now we're fighting back a little bit, but still an inside bar.
Yeah, those inside bar reversals, not as important, I would say, as, let's say, a bear. If this were a bullish engulfing, that would be quite the move. But still, it is bullish, and you can say, well, you know what? We retraced past the halfway point of Friday's candle. That's fairly bullish. Could it be just a pause, profit taking? Right? You see this big move down. I'm going to get out. I'm going to get out. I'm going to get out, and then it might resume the trend. Of course, there's two sides to this coin, no pun intended, which is, what is the ECB saying and what is the Fed saying?
Yeah. And then the ECB goes first, the Fed goes second.
Yep.
So we might as well just look at the yen while we're here. I haven't looked at it in some time, as you could see, because my fib line is all messed up. But let's oopsie, didn't want to do that. Let's go ahead and delete it. So a little subtle pullback up. It's still firmly in a downtrend here.
Yeah, the one thing, though, Jim, that it might be transitory or in transition is the fact that we finally closed above the 8-period moving average. I mean, you have to go back about 3 weeks to see the last time. And those hopes of a rally right there, those hopes of rally were quickly dashed, right? You could see that big candle, big red candle. That was, I think, due to the election results. But Um, now we're getting a little bit of hope for the yen 21 period moving average, your next target.
Yep. Yep. There we have it. All right, all right. So that's where we're at here. Risk back on. We're going to be on our toes today. We do have Sterling Smith coming at 10:30, and then certainly one of my favorite characters in the trading world, Anthony Drager, Edge Trading. You're going to be with him for Traders Workshop, right?
Yeah, that'll be great. By the way, I want to give a quick special shout out though, to the Lieb. I got it right this time, Jim. The Lieb, first one
The
in the
Lieb.
YouTube chat, the Lieb, and then Cal. Cal is the first one in the NinjaTrader chat. So special shout outs to both of you.
Cal, thanks for being here. The Lieb, thank you too. All right, so I guess at this point in time, let's take a really quick break and we'll get ready for the opening range.
Great.
All right, we are back, NinjaTrader Live. My name is Jim Cagney, and I'm joined by my partner, Tom Schneider. Tom, I have a 10-minute E-mini S&P candle chart on the screen, and I have a highlighted region highlight area here, just kind of showing off this huge gap from Friday's close to Sunday night's open.
Yeah, that is a huge gap. And you could probably draw a second one, Jim. I'm
Yeah, I could
guessing.
draw a second one. Sure.
Draw a second one after 8:30. But you're right. This gap, we would look at this and say, boy, this gap really wants to be filled. You could say that.
Mm-hmm.
But I don't know if it'll happen today. I just don't get the sense that it'll happen today. Now, this to me is a reaction. It looked like it was a possible reaction to the Chicago Fed index, maybe for a little bit. It was kind of going sideways. This market didn't have much of a range after the gap, right? So if we look at the low was roughly, let's say, I don't know, the low, let's see,
60.05 maybe?
Yeah, 60.05, yeah, 50. But
Yeah.
after that, it kind of fell in line right at the previous day's low, which was about 6,009. And then it really didn't get much above 10 handles higher, 60.19, right? That's that kind of wick that's peaking above the second standard deviation band. But something accelerated that to push it above to make a new high at 840, the candle ending 840. I really don't know what this is about, except the only thing that you mentioned was the Treasury Secretary pick moving us up. it seems friendlier to Wall Street, and that's what they're looking for.
Yeah. I'm not so sure we can't fill this gap today. I mean, this is looking pretty strong right now. I don't want to freak everybody out, but it's a long, long day. We'll see. We'll see if all of these areas, there's low volume here from approximately 619 all the way up. I'll draw a second region highlight tool just to kind of highlight the fact that, hey, this whole rally is based on some low volume here. And then we're settling a competing point of control right now. But right now we almost have an equal and opposite candle. So we'll see if it sticks. R2 is right in the middle of all the action. So R2 might have some explaining to do. That's what I'm thinking.
That was a target at, when that rally happened, that was definitely in the sights, but then it extended, got a little proby, and we got back up there again. This to me is a tough market to trade. I would not want to trade it right now going into the opening range in 10 seconds. I want, maybe we stick here and just see what the move is. What move is afoot?
Yeah. The game is afoot. Isn't that like Sherlock Holmes said that?
I believe it is.
The game is afoot. So opening range, going into the opening range, 200,000 contracts traded so far in the mini S&P. I'm looking at the December 2024 contract, which is the front month. Cumulative delta right now is a positive 15,240, but it's starting to arc down a little bit. So is my commodity channel index. It's quickly arcing down to zero. We're at about 60 now. And then at the very bottom here, I added, due to popular sentiment, the RSI. Also arcing down, but still pretty good. 62, 63.
Yeah, I think with this move here, it's not surprising. It will probably get to VWAP. It's filling the volume gap. When you highlight those areas, Jim, it makes me think, boy, if we get into this is almost like a vacuum, and it pulls us to the other side. So the question is, does VWAP hold? VWAP's held pretty nicely as support the entire session, although this is really where the session comes alive, and maybe we'll see follow through to possibly that one standard deviation below VWAP, which has held as pretty good support the entire session. I don't think we've closed below it. But we've closed below it once in the first hour, and that was it. Oh, maybe, yeah.
Yeah, I'm going to go down a limb here, Tom, a little bit.
Yeah.
This little area of support that we saw here, 720, 730, 740.
Yeah.
This is the zone. If we break through here, then this gap could get filled. This is my area. This is where I raise my eyebrows and I say, all right, if we come out, I know it seems like a far bit away. It's only 10 handles. It's not that far. So this is kind of my area. It's like, all right, there's a breakout trade to the downside here, filling that gap if we get here, possibly.
Now, you make a really good point, Jim, which is it doesn't look like it's, oh, wow, that's a big gap. It doesn't look how much we went up at 8:30. Boy, we're not going there. It's only 40 handles from the high of, I think it's the high of today, to filling that gap.
Let's do a real quick reality check. All right, so we have a 28 handle range. If I bring this down to the bottom of the, holy cow, I have to do some work here, Tom. Hang on a second.
Yeah, no problem.
Let's bring it all the way down. Yeah, 40. You nailed it. 42 and a half.
And our average true range is 65. So yeah, I'm not. You look at a daily chart, you say, wow, that's a really impressive gap. We have a big green candle where we're trading right at the top of. This is bullish, man. But if it doesn't stay up at the top of the green candle, we could fill that gap. It's only 40 handles. Yeah,
and the flow into the underlying equity market is at last I checked all-time high. Oh. So money's flowing into the equity market.
Yeah.
So that's another factoid we got to consider. Anyway, let's keep rolling here. Let's go to the Russell because it's so strong. Russell 2000. Oh, excuse me. Above R2. Just crushing it. negative cumulative delta, which is, at odds with the price action right now. But R2, what's the volume? 40,000 so far in the Russell 2000. That's not a bad start. Relatively nice volume profile, though. This point of control here overnight, we traded through this point of control every single 10-minute candle, like 80% of them for the whole session. So 2440, 2439 is also on my radar screen. We'll see. If we start developing a volume profile at the top, in other words, some volume nodes start generating volume at the top here, then maybe it will be a double distribution day, but I don't think we're there yet.
Yeah, this might be playing a little bit of catch up because it finally broke R2, right?
Yeah.
It's even though it's up the most, it's on 1 3/4. That could be the gap, right? That could be the gap giving it a lot of juice. And your first candle of the session is dominant, but it might be overtaken by this candle. They're about the same size. They're kind of acting as bookends. This is looking pretty bullish. I'm not looking to sell here. This is looking more bullish than the E-mini for sure.
Yeah, I agree with that. And I think when you do this is a benchmark candle on the left, number one, and then benchmark candle on, right now is a mirror of that. Oh, come on, Jim, just copy and paste that, and we'll get that over there in a jiffy, right there. So, yeah, that's interesting. So if you take those two benchmark candles together, it might be a huge up day for the Russell 2000.
Yeah, yeah.
Where's R3 at? Oh, wow. R3 is at 25 even, give or take. 2503.
Wow,
Sorry.
that's pretty far away.
That's a spicy meatball.
It is.
Mamma mia, that's a spicy meatball.
That is for sure. I'm just going to do the measure. I'm going to do the measurement time just to see where R3 would be.
Well, it's like 2 ATRs.
75.
Oh, okay.
Well,
So
and I'm doing, yeah, but still, I mean, to your point, a huge.
Yeah, and the question is, where do we measure from, right? So average true range figures in gaps. We should probably measure it from Friday's close, right? So
wait, I didn't know it measures gaps.
Yep.
Of course it does. There you go.
So
you're right on. You nailed it. 84.7.
It's close. Yeah. So almost 2 ATRs away. I don't expect that. That'd be asking a lot of the Russell.
Well, we'd be up like 3% or something crazy. Yeah. That would be something. In any event, we'll leave the measurement there. We'll see. But this is still strong. There's no, we'll see what the next 10-minute candle brings us. Remember, this is only the first 10-minute candle in the opening range, so we have some time. And cumulative delta is still a little negative. CCI is arcing up, but RSI is arcing down. Oh, this is great. I love it when that happens. We have divergence between the CCI arcing up past the 200 level, which is pretty darn strong. And then the RSI, though, is only 51.52.
So Jim,
what do you make of that? Yeah.
Well, let's double click on that.
Oh, that's what I made of it. I don't have it set up right.
I'll tell you why.
All right. Never mind. Price change. Now, what do you think it's going to be? I'm going to go with 65.
It's going to be up.
Oh, 72.95. All right. My bad. I didn't have my data set right. To the moon. Oh, my goodness. Yeah, we're tracking higher. Man, this is just strong. Equities are super strong. Go ahead, Tom.
Let's look at the NASDAQ.
The NASI, micro NASI. Yeah, it's not as strong, but still almost up 1%. Wow, look at that first wick. Here's why the first 5 minutes of the NASDAQ, I don't want to trade it.
Exactly.
I mean, look at that wick. Look at here. Let's just explore this a little bit. Look at that candle. I mean, that's a wicked candle, and it's not done yet. It's still trying to think about a direction here. Just go high to low. High to low on that candle is 175 points.
Wow.
That's pretty big. That's pretty
big.
Big.
Average true range is about 310, just to put it in perspective.
One candle.
175.
Yeah.
What's interesting to me is this cumulative delta is so positive on this candle. Um, and this market really hasn't moved higher, right? It turned down opening range, it got back to the point of control, and then turned around and buyers came in, but it's at really high levels and it just can't move. And this is where if it can't take out the previous highs of the last two candles, it just might be somewhat like a squeeze going on, right? Because if I bought in this market, if I buy at this level and it just can't get past Jim's rectangle, how long am I going to hold it, right? How long am I going to hold it and wait for it to move? If it just can't move up there, this
Yeah.
is where Anthony Crudelli has those great charts, those footprint charts, right?
Look at
That
that.
show us where the
We just
volume is.
did you see when we took out that high target wick, how fast this thing just popped?
It did.
As
Yeah.
soon as we took out, because there's orders there, right? There are orders there that, traders saying, hey, we take out this target wick high here that we saw 3 candles ago. I want to get long because I want to do a breakout trade to the upside. And boom, all that volume, all of that activity, all those orders just pushed us all the way back up here. So this area of what I was excitingly going to say resistance is now been
No
deleted
longer.
from my chart, possibly forever.
Yeah. Now I feel better about this being bullish.
Yeah, ditto. And now the prospects of this gap fill's diminishing as we speak.
Right.
So I'm going to do the ruler anyway, Tom. Just low to high, just real rough, a rough calc right now, 155. All right. By the way, Tom, who is here with us today on this glorious Monday before our Thanksgiving holiday?
Oh yeah, we've got some great people in the chat. Remember, chat exists at YouTube and at ninjatrader.com/events. And in addition to Cal, we have Raleigh, Paulie H, Nola Boy, Foggy Cape, Simo, Carlos NYY, Robert W in Wake Forest, Jen P, Future Fun, Eknos, Mark Mosqueda, Mark R, Boston J, HP, Madawa. We have Michael Crump back here. Claudio. Now, Claudio, I don't know. Claudio, I think we've seen his name before. Welcome. In addition to the lead, we have Lobo and Gregory Bird. Lumen is here. Patricia Meyer and Steve Haggerty. John C. W. Mesticom. Jorge Canessa. Good morning. Nicholas is here. Rod Zabalaga. Jorge Castaneda. Did you hear me stutter when I said Jorge the first time? Because I
Yes,
was
yeah, because
expecting to say Castaneda, and there's a
yeah,
different Jorge with the same first letter of the last
yeah,
name. What a
yeah.
small world. Um, Michael Milo is here. John Boynton, Frank from Denmark. Bordado is back. Todd Musser and Scott K. Tim Lovell, fly it here. Uh, Magid Ali is here. Six String Dow. Daryl Booth with an E. Genis Tech and Trader Josh. Latoya Drummond. Engineer Beer. Nope. Engineer Bear is here. Miss H, Bowhunter, Patch Zev, HCE, Kevin Stark, and D Merlo. Let's see. Aaron is here, and Rampage and Lewis H all here. Thanks for coming, everybody. We really appreciate it.
Absolutely. Very humbling. Thank you guys for being here, especially on this week, shortened holiday, because due to the U.S. holiday, Tom. Now, Canada does celebrate Thanksgiving, but I think on a different day.
They celebrated in a different month. They celebrated in
What?
October. Yeah,
Oh,
no joke.
oh, interesting. All right.
I,
Well, in any event, if you are celebrating, if you're in the U.S., let us know if you're making a turkey or you're not making a turkey. Just type it in the chat. Yes or no. Yes, turkey, no turkey. My guess is it's going to be mostly yes turkeys.
how about you?
So,
Are you?
well, this is okay. So I have a little bit of a problem. I don't
Uh-oh.
have a problem. I have a challenge, right? I'm glass half full. There's no problem here. So Mrs. Kaggs is going out to Arizona to visit offspring number 2. Whereas me and offspring number 1 are going to go to Mom Kaggs' house.
Oh,
But Mom Keggs' house, remember, Dad Keggs broke his hip, and Mom Keggs is wheeling him around all the time. So it's up to me and my brother. It's up to me and my brother to prepare the meal. So it'll be an interesting thing. But yeah, we're doing turkey, mashed potatoes, the veggies, the gravy, the cranberry sauce, the whole thing, man.
Yeah, we're doing the same thing here. In fact, we picked up the turkey this weekend.
Nice.
Yeah, we have it out in
Nice.
a pen in the back. It's great.
Yeah.
No,
That'll be
kidding.
fun plucking those feathers. That'll be fun. John Boynton, by the way, look at this. 3 deep fried and 1 oven baked. Big group coming to John's house. That's a big that'll be
group.
fun. Yeah, what's your address? Maybe we'll just go to your house.
Get a real big group. Kimberly Singleton
Yeah.
says yes. Scott, Charlotte, North Carolina says absolutely. LA says good morning. Yeah. Fatfish is here. Swanson's dinner. Hey, that's not bad either.
Patch is a yes. Mandatory.
Yeah. Flight here says no. I wonder if you're not having turkey, what you're having. That'd be great.
Oh my God. Fly it here. I feel for you, buddy. Anyway,
Ham. Okay, ham.
ham
That's
this year.
great.
All right. Bowhunter venison. Well, I'm not surprised Bowhunter's is having venison. He went out and got his own venison.
His is store-bought. Come on.
Engineer Bear, no, Cornish game hens, which are great, by the way. And there's just 2 of you, so I get you. I'm with you on that. That's perfect. That's a perfect compromise.
And Xavier is here. Xavier Iloa.
Sweet. All right, let's get back to this rally is still in play here, guys. Thinking about trade ideas here. No major resistance yet. Let's just shoot over to gold, though, because gold is down. This is amazing, Tom. Gold is down, and my chart's not updated yet. Let me just go ahead and get rid of that drawing object. Look at that. Down 2.64%, $72. This is a huge break in gold.
This is risk off for gold. It's risk on for the markets. Risk on means let's take our money out of gold, put it in the equities market. When I see a break of S2 like we saw, S2 really wasn't even consideration, right? It may have stayed there for a minute or two and then continued the downtrend. So S3 is what I'm looking for, 2605. That would be a reach, but it is within the realm of possibility. I mean, gold, let's say call it 43 handles. Yeah. And so that would be a big reach. That would be 2 times the average true range. But on a day like today, you can have big moves on days where there's supposedly low volume. Now, this might not be a low volume day. This might be actually a normal volume day because maybe people are cleaning up the doing their business on Monday and Tuesday before they leave for the holiday. So there might be some normal-ish volume happening today.
Yeah, no, for sure. For sure. So a little bit of a volume note accumulating down here at the bottom of the value area for this micro NASDAQ market. Gold market at 26.45.9. So we'll see if this volume node develops further or the trend continues. But this is a pretty decent sell-off that started at 9 o'clock.
Yeah.
So again, no area support. No, I'm not hitting the buy button just yet. We got to figure out where that bottom is and think about it. If we're going to have any kind of meaningful retracement back up to the point of control and VWAP, maybe we will. But right now, I'm going to kind of put my hands in my pocket and we'll think about it.
Remember that 2640 level was what we were looking for.
Yeah.
From the daily.
Right. And I'm going to draw my horizontal line there, 2640.
So that, we'll see if that holds as support.
Yeah. It's not rectangle worthy just yet. It's line worthy.
Yeah.
Yeah. So I thought I'd clarify that a little bit. 30-year bonds right now are ripping higher. This is a big move up. Anytime you have more than a 1 point something move on 30-year bonds, it's big. And that's a whole handle, 32 ticks. And we didn't quite hit R3, and there is a little bit of resistance up here. But this retracement might be actually perfect looking retracement. Let's see. We're almost to the 25%. Not quite.
Yeah, notice how, Friday's highs held as support. came right down there, kissed it, and turned around.
Yeah.
Went right back to R2, and R2 has played a pretty important role in trading today, right? It was resistant.
Yeah.
Europe opened up and brought it above, and it was support for quite a bit. VWAP right there at R2, just due to the trading that happened during that time. When
Yeah.
it fell down to R1, or rather Friday's highs, which is above R1, and turned right around. So
Yeah.
R3 in target, in sight, I think we can get there today.
Yeah, here's my buy zone here. I just put it in there a little bit. I'd like to see a little bit more love on the downside, but we'll see what happens when the opening range is over. And well, that's actually 37. No, we have 10 minutes still.
Patch Zev had a question about cumulative delta, and I think on the bonds, this might be a good example.
Okay.
So cumulative delta is the difference between activity at, buyers versus sellers, we call it. Who bought, who sold, right? Who's actively buying or selling? Who's going into the market saying buy market or sell market, right? And so when that is positive, there are more contracts that people were buying than selling. Now, of course, every transaction has a buyer and a seller, but we're talking about active buyers and sellers. And so this bond market, there have been, looking at the cumulative delta since the session began, it's been positive. There have been more people buying it. It might have dipped below actually at 7 in the morning to below negative. But what I look for is where are we in the range of the day or in the trend, current trend, and what is cumulative delta telling us? So when we're in an uptrend, we would expect that cumulative delta to go up. Now, if it's positive, that's even better, right? It just means that more people are buying than selling. And if we don't see at the top of this trend, like right now, we don't see a big move down in cumulative delta, then that's bullish, right? You could see a cumulative move down it might even still be bullish at the top of a trend. It could be profit taking, right? So if you bought at Friday's highs, when we touched that at about 7:30, you bought bonds there and you see this big move, you might want to get out of your position at the top, and that's fine. You might say, you know what, I'm not going to wait for my target. I'm just going to hit sell. Okay, fine. But if I were to see, a negative cumulative delta, it would worry me in this trend. So what I'm looking for is kind of alignment between cumulative delta in the trend, in the direction of cumulative delta, and is it above or below zero, right? I'd want it to be in the same polarity of the trend.
Yeah, great explanation. Also, it's sometimes it's easier to visualize this idea on a trading ladder. So right now you can see the bid is at 24, the offer's at 25. So we'd say, for bid at 5. That's how we would say that. You can see that there's orders on the buy side on the bid, right? And you can see that yellow label, which is telling us this is where the last trade where the last trade happened. On the offer side, on the sell side, you have, or some people call it the ask side, you have a number as well, right? You have how many limit orders are in the book at that price level. And the difference between the highest bid and the lowest offer is the bid-ask spread. The market trades could happen either on the bid or on the offer, right? So trades could happen on the bid or on the offer. And if they're cumulatively happening on the offer instead of on the bid side, that causes upward pressure in price. If bids are happening on if trades are happening on the bid, the lower number, then that's downward pressure, and that's what cumulative delta tries to measure.
Yeah.
That if I said that right, I hope I did. I think I did. Oh boy, Anissa is here. Good afternoon, Anissa.
Oh, good afternoon. Joe G is here as well.
Joe G is here with us. All right, let's go to the Bitcoin, man. Down over 3.5%, according to Joe G. Thank you for that. Wait, am I in the right month here? I want to be in the November one still. That's where the volume is. Let's go to November. Yeah, not interested in hitting the buy button, Tom.
Yeah, S2, again, not even a concern for Bitcoin. Question is, where is S3? You know, it's just a reflex I have, Jim. When I see a pivot level broken, I want to see where the next one is, just so I have perspective. You know, are there any other support levels in the way? You know, I might have to go to a daily chart to look at this, but this is looking fairly bearish. So cumulative delta is negative. So to your point, Patch, about how do we use cumulative delta, when I see more increased selling as the market goes down, that's like people catching up, a little bit of FOMO maybe, or I want to jump on this trend, and that's bearish, right? If people, more and more people start selling, to Jim's point about the ladder, this is going to be, you know, this market could continue the trend. Now it doesn't always happen that way, but the probability for me is that it will. So I don't know, I don't have a profit target in mind, but you know, I'm not looking for places really to buy yet, because you have lower highs, lower lows, and a red body candle. Everything's bearish on this.
Yeah, for sure. I mean, you even have an RSI at 18. And usually when you see that, it's like, oh, this is so oversold. I'm getting long. Look at that RSI at 18. It can't last. But keep in mind, this market's a little different than the other markets we look at, in that it routinely moves up or down 3%, or up or down 4%, or up or down 5%. So you have percentage moves that are huge in this market. And that, I think, would sometimes could skew the RSI. Tom, correct me if I'm wrong on that.
No, well, it'll react a little bit. Yeah. It'll react a little bit harder. I don't know if, yeah, skew is probably a good term.
Well, so no, maybe a better way to say it is, so that the 30 level might not be oversold. It might be the 20 level, or it might, you know what I mean?
Right.
There's some debate on what that could be.
So there's an idea, and you know, it's like an adaptive level, right? If you're in a downtrend, you move it down. If you're in an uptrend, you move it up. Yeah, I mean, there's pros and cons.
Yeah, but I mean, however you want to slice this bird, no pun intended.
Yeah,
I'm not ready to hit the buy button.
I think that was Connie Brown who kind of put that theory out there.
Connie Brown, I don't know who that is.
Yeah, technischen.
Is it? Oh, and you said Connie Brown.
Yeah, Constance. I call her Connie.
Oh, okay. What do everyone else call her?
Mrs. Brown. I don't know. I think they call her Connie Brown too. I've not met her, so I'm being a little flip.
All right, I haven't met her either. I didn't even know her name until you told me. I'm gonna look her up now on LinkedIn, see if she'll be my friend.
Your friend.
Well, isn't that how you link in with people, right?
They still do that, yeah.
I don't know what good it is, but
iCal is here, by the way.
iCal is here. With that note, iCal, thanks for being here. Let's go ahead and take a really quick break. We'll look for some trade ideas.
All right.
All right, we are back. Ninjatrader Live. My name is Jim Caglina, joined by Tom Schneider. We are looking for some trade ideas. I have the micro E-mini S&P up on the screen right now, and I'm looking for this gap to get filled, Tom. I mean, I feel like, I'm a little bearish. I had berries with my yogurt this morning, so I feel a little bearish this morning. But so I'm gonna try to get shorter. If we break down, this was your actually great order entry idea. Instead of a breakout of the opening range, if we break out again, we challenge that target wick again, and we get to the bottom of the value area. I want to get short 2 contracts in the micro NASI and see if we can get at least one of them back for that gap to fill.
Yeah, I like that. I mean, it's that idea of, boy, this gap. First of all, in the Nasdaq, I don't think the gap is that big compared to the other gaps we saw,
No,
like the Russell.
no.
So, oh, there we go. We're filled on that order. So now it's a little bit of time to put in stops.
Look at
But
that. Look at the velocity. It's going.
yeah, it just looks like this market does want to fill this gap. Um, where would you put your stop? Would you go above the point of control? Maybe a little higher than that? Maybe
Well,
above VWAP.
okay. Yeah, I mean, this area right here, I think we're in trouble. This is like that 62.5, or was the 62.5, right above VWAP there. That's an aggressive stop up here, right? So if we put it way up here, we're saying we want this thing to go. Another idea for a stop loss for those who aren't so aggressive is just above the contemporary candle. So it'd be really tight. You'd be right above our R1. But for the sake of the discussion, let's just leave it where it's at. Unless you have a
Okay.
better idea.
No, I think that's fine. Above VWAP is good.
I'm open-minded.
And it's kind of got that what do you call symmetry, right? Where
Yeah.
the stop distance to the stop is maybe it's a little bit
Yeah.
bigger than the
Maybe
distance to the first
one tick
target, I'll
above.
call it, because we do want to see what'll happen if it does get to that target and fill the gap.
Yeah, I want to be one tick above the gap. So let me tell you where it is. High 79.75. Yeah, so I'm a few ticks above it.
And that gap, by the way, Friday's close was right at Friday's high. I mean,
Yeah.
this would be interesting. You might see that this gap fills and then the market turns around, right? Because we think of when we close at the top of a bar or a candle, or we close at the bottom of a bar or candle, then you expect follow through. So this is a tough thing, right? You've got two kind of contrarian forces. You've got a gap fill, which is opposite to the idea of follow through on a really strong close from Friday.
Yeah.
It's its
Yeah.
own worst enemy, that gap.
Yeah. I mean but that leads to another trade idea, right? And that idea would be, hey, I want to reverse it down here. I want to take profit off the 2 contracts that I was successful, and then I want to go long another 2 in reverse. That's another strategy. I don't know if I'm brave enough for that, but that's another idea.
What I would probably do is if we get that first target, I would trail my stop down to break even minus a couple ticks because we're shorting. And I would see if we get a runner, if it continues, or if it turns around, I might stop and reverse. So instead of having a 1 unit stop, if we get our first target, I might
Yeah.
do 2 or 3 and try to
Yeah.
get that reverse.
But Patch just had a great comment, which got me thinking.
Uh-oh.
I know it's dangerous when I'm doing that, but Patch said, do you guys measure your gaps end of day Friday to open Monday, or do you take into account Sunday's action? So this gap that we're measuring right now is the Globex gap, right? We closed on the Globex close approximately where my crosshairs is, and then Sunday night, we opened here. Now, there's another gap you'll probably see on the equity charts where the close was an hour ahead of time, right? And the open wasn't until we opened. So that gap's going to be a lot bigger, a lot lower. Let's see if we can kind of estimate where that's going to be. So, Yeah, so not that much not as low as I thought, but that gap would be a little lower because if you're thinking that gap's going to close.
So that's a great comment. And
Yeah.
what it what it really depends upon is how do people look at their charts on a daily basis? When do they construct bars based on just regular trading hours, or do they construct it on the entire trading range? Because I think gap filling really is about what you see on the chart, right? Nobody's
Yeah.
really kind of paying attention to the price as the primary driver of that gap filling. They'll look at the gap and say, oh, okay, where did we close on my chart? Oh, is it this price? I'm going to put an order like Jim did, a tick or two above. So that's a great question. I think if people look at daily charts using just regular trading hours,
Mhm.
then you're right. It'll be a bigger gap to fill. I don't know the answer to that though. That would be a great poll question though.
Yeah. Yeah. So we'll see here. This might take a little more time than we thought. I thought we were going to drive down there right on the break of the opening range lows. Buyers are coming in instead. But we'll be patient. We'll be patient. So again, we got a pretty wide stop here. So the idea is, hey, let's kind of move our stop to break even once we get our first contract off the table, if we're fortunate enough to do that, and then let the second one roll a little further, which is possibly could do. This might not just be a gap fill move. If we do get down there, it could be a trend reversal move.
Right.
Oh boy. All right. Bitcoin. Wow. Look at that. It's down more. Let's go to Bitcoin. Tom, sorry. These numbers are startling.
95.
Yeah, 4%. 95 next target. Is S3 inevitable today? I don't know. Maybe.
I don't know about inevitable.
I don't know. Thanos might think so.
We're hitting right about now. We're hitting the average true range.
Okay.
Probably a little more with the gap.
Yeah.
So I would measure it really from probably I don't know. It's tough to say.
Yeah, I know.
From that close, the session close on Friday, the Globex close.
Yeah, so
Regardless,
approximately
we're
there.
above an average true range. So if today is an above average day in the stock market, then maybe we'll see an above average day in the Bitcoin, which means probably further downside action.
Yeah. Tom Bohenner's got a question right up your alley.
Uh-oh.
What does it mean when the pivot levels are close together?
That means the previous day was a narrow trading day. So if you have an example, Bow Hunter, of a market.
Yeah, all these are wide, the ones we're looking at.
Yeah, I think so pivots are based on the previous day's trading range. So in this case, Friday's trading range. And what we use is the high, low, and close. So those calculations, when they're applied to the current chart, if we see that they're closer together than they have been in the past, it just means Friday's range was smaller than average or smaller than the previous candle, whatever you want to call it. It's not a big range. So it also could mean that because the chart, when you use a charting platform, hopefully it's Ninjatrader that you're using, when you see those levels, like I'm looking at Bitcoin chart, I see the pivot, I see S1, I see S2 on the screen. If it means that today's move is probably wider, generally speaking, than the previous days, right? So it's all about like relative ranges, so to speak.
Makes sense. Yeah, yeah. So all right. So Bowhunter though, these R1s and R2s are a little deceiving because of the way I have my x-axis. This R1 is 941. R2 is 21005. So that's a pretty big range actually. But when you
Yeah, like
squish up your, yeah, it's a little bit deceiving when you kind of move your axis around like this.
Yeah. Tomorrow, most likely, the pivots will be wider because today's trading ranges are wider than normal.
Yeah. Yeah. So, I mean, this market wants to try to get to the point of control, but it's just having a little difficulty here. So 20,960 is where that point of control is right here.
And our
It's
stops
just
at, what's your stop at? Like 980, 983, something like that.
yeah, 984.
Oh, we're a tick off.
Yeah, well, I mean,
Like,
it's above VWAP. It's above that 62.5 harmonic when I had that measurement from,
yeah.
and that was the retracement from low to high, right? So I measured low to high, and then we broke out above it. So the fib line's kind of not even good anymore, to be honest with you. I mean, I could move it up. Well, in theory, I should move it all the way up to here. So we're just breaking new ground here on the downside.
Yeah.
I mean, there's just no buy signal yet. Again, I want to put a rectangle down here, and I want to see some support, and I want it to be at least more than one bar. I mean, you got to have 2, 3, 4 bars. I know I'm looking at a 10-minute, and maybe on a 5-minute, you might see something different, but I'm going to be patient. So far, we might be on the right side of history here. This thing is super volatile, though. I mean, I'm going to pull up the trading ladder. You guys are going to be like, what? This is why the chart trader is so great. I mean, it's little hard to put orders in. A little hard to put limit orders in a trading ladder when the market does this.
It's like popcorn.
Popcorn. Popcorn's a poppin'.
Can we take a look at crude?
Yeah. Absolutely. Crude. Remember, we're in January, folks. Wow, S1 is support, baby. Big time.
It's what it's looking like, right? But what I see, Jim, is I see negative cumulative delta.
Yeah.
I just like a breakout of either the previous candle's low.
I'm going to draw my
Yeah, I think the
rectangle.
previous candle's low.
So
Try
you
to
want
get
to, and this is a sell trade, right? Sell?
sell trade. Yeah, try to get
All
to
right.
Friday's lows.
All right. We'll sell to stop and a breakout below this target wick right here. So we're looking at a target wick breakout on the downside. There are some wicks down here. Buyers are finding value down here, so we have to be careful with this. But Tom's target is previous session's lows, which is right about here.
Yeah, I think, I think in the past we've seen 68, 68.50 is where buyers come in.
Mm-hmm.
And I just think the news that we heard this morning was pretty bearish for crude. It's kind of
Yeah.
we mentioned hopefully there will be peace in the valley, right? So
Yeah.
that's kind of what that's looking like.
Yeah. We'll see though. This will be good though. If we get a close below here, if we get a close in my rectangle or below my rectangle, that would be a good thing for this trade idea. If we just get a knee-jerk reaction wick and back up above it, then I'd be a little bummed out.
So we close the gap in NASDAQ.
What?
Take a look.
No way.
Kid you not.
All right, we did it. We closed the gap, move that stop down and break even, change it to a 2 lot or 1 lot, and think about the next. That's a little bit too aggressive. And be right at the top of the wick. There we go. So I moved the stop to break even. I changed it to a 1 contract, and I'm right above this wick here. And remember, we were talking about a little bit of an extension to get down past the gap for the equity market, which we might have just got. Not quite. Where's that 1600? Yeah, we almost tagged it exactly, Tom.
Yeah.
Regular trading hour close. Boom, we're almost there. So I'm going to aggressively, I think, trail the stop unless you object.
No, I think
I
yeah,
think there's going to be buyers down here. I could be wrong, but let me just draw my rectangle right here. I think it's happening. So I'm going to bring it down to the bottom of the value area. I know I'm like not as aggressive as you. I'm a little, because I'm older. I'm the old guy. I'm wearing a sweater and it's still pretty warm in here.
I don't know about that, but you're right. I think that's probably a
All
good
right,
thing
I'm
that you
out.
did that.
All right.
Yeah.
We'll see. I just feel like this gap was filled now. It's satisfied the curiosity seekers. You know, we have huge volume going on here, and this market is really, really. I mean, look at this, and it's really, really volatile, really, really wild looking right now. You know, and this when this candle closes, you could always put another trade back on.
Yeah, no, my stop was at the opening range low, which is about 918, 919.
Okay,
So
so
we
you're
have
still
not
in?
I'm still in it. I'm just
Yeah.
going to let it go, and I
Okay.
will tighten it up if or I will trail it if the market goes away, but I think you're right. I think okay, mission accomplished. Market is I think generally wants to be bullish. Although cumulative delta has swung negative. So,
Yeah.
that to me could be further downside.
Yeah, but I'm not surprised. I mean, look at these huge red candles. Boom, 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 four in a row.
Right, right. Profit taking.
So on bottom of the value area just shifted down a little bit. We'll see how it goes. CCI still pretty negative. RSI 35.5, give or take. 35 even now. Yeah, it's moving around. Dow is still, look at this, Tom. Let's go to the Dow. Holy cats. There ain't no gap fill here.
No, no.
Mm-mm. Mm-mm. VWAP is holding. This is a VWAP touch extravaganza, right? Once, nice signal. Twice, nice signal. Three times, nice signal. Every time we tap on VWAP, buyers come in, buyers come in, buyers come in. And even back here, this is a Brian Shannon chart day right here, baby.
Yeah, all these places, right?
I mean, every single time. One, two, three, four, five times we tapped on that session VWAP. Five times buyers came back and brought us up.
Yep.
That's an impressive chart.
I'm out of my NASDAQ trade, by the way.
I had a weird feeling about that one time.
Yeah. It's still
But the reversal might have been good. It might have been, that was your idea. That might have been a good idea.
I didn't do a reverse. I just got out.
Yeah, no, I know. I
Yeah.
know. I'm just saying, if I was a little braver, I wasn't such a chicken today.
It's still looking negative. It's
I
still
should say, yeah, I was a turkey on that one.
you're, you're turkey.
Didn't it was that was the thing in the 70s. That's how how kids would. It wasn't really. It was kind of an insult.
Oh yeah.
Man, that guy's such a turkey.
That's right. That was
That's what you'd say. Yeah. Now you'd say other things that are not family friendly, so we're not going to say it here on the show.
right, right.
Oh man, whew, what a morning. Where do you want to go to next? I mean,
Let's go.
let's go to the Treasury bonds one more time. I just want to see if there's any retracement, any chance to get long here. 30-year bonds right now are just range bound right now. I mean, we have 21 to 29. That's about $240 worth of risk or potential. Totally consolidating right now, Tom.
So I'm looking at 117.19 to go long. And the
Oh, so
reason
you
is,
went, yeah, tell me.
yeah, so you have a choice. I was toying with 117.20. It's right at that standard deviation band, but by the time the market moves down, maybe it's a little bit less.
Okay.
So my thinking is that I like that trend between the 1 and 2 standard deviation bands, when it comes back to the 1 standard deviation band, go long and see if you can get back to the 2nd standard deviation band. We might have missed it with this current candle, but maybe that's a reason to go to 20. Yeah, maybe it's a reason to go to 20. Yeah.
Okay, we could do that. So let's pull this up, right? We'll try to get long at 20. We'll try to get the 20s. My stop's below VWAP in that 50%. That's about a 9 tick range. And so whatever 9 times 31 is, that's about $270 of risk right there.
Yeah.
So keep that in mind. A little bigger size contract, bigger size ticks here, but you got R3 in play. You got some stuff in play here, possibly.
Yeah, I think this is bullish. I think the pullback, we see this a lot when it trends between those 2 standard deviation bands. It's okay to look at maybe playing it back to 1 and going to the other.
Yeah. All right, let's keep it. Let's see how it goes. We'll let this percolate. Xavier asked, why is the NQ so much more volatile than the ES?
Okay,
well,
so
go ahead, Tom.
Let's talk about tick size or increments, right?
Yeah.
So the E-mini is trading at the 6,000 and it has quarter increments, right? You can trade at 6,025 cents, 6,050, 6,000. But the NASDAQ, what their dollar increments, right? Are they
no. They're quarter increments too. But they're small. It's a smaller tick size. It's a 5-to-2 ratio.
But it's also a bigger, what would you call it? It's a bigger size, right? Or it's a bigger price.
Well, it's a bigger price, right? So we're talking 20,000 versus 6,000, right? So it's about 3 times the number. The aggregate number is about 3 times bigger, which means that a percent change is going to reflect. Any percent change that's the same between these stock index futures are going to be about the same. But the Nasdaq's going to move more on the trading ladder. That's part of it, I think, Tim.
Yeah,
I think
more increments per percent. Yeah, go ahead.
Yeah, does that make sense? And then the other part of it, I think it is a smaller size. It's a smaller tick, right? So instead of a $5 point in the micros, it's a $2 point in the micros.
Right.
And then lastly, it's just hard. Orders don't survive in the order book very fast. So there's probably more market order. I don't know this for fact, but there's probably more orders being entered on market orders.
Jim, let's take a look at our. Did you put in that micro crude trade?
Maybe. Yeah. Look at that baby go. We're short too. Nice call on that. We got some work to do here.
Yeah. So.
Target right above previous session's lows.
Yep.
Stop. We're stopping this baby out. Value area low, maybe. It's above 72, so maybe that 70 level is something to think about.
Yeah, and that's kind of again that symmetry that we like.
Let's go a few ticks above it since it's a micro, though.
Yeah.
All right, we're on the way. Good call on this. I like this. I like this a lot.
There we go.
Engineer Bear says, why not the Ultra bond instead of the 30-year Treasury bond? So EB versus ZB. No reason, Engineer Bear. I think the Ultra bond is got a little less volume in it. It moves more. Its ATR is higher, for sure. It's a grown-ups market for sure, if you know what I mean. But I'm just biased because I've always been a 30-year bond guy. That's all. But still, there's plenty of liquidity. There's plenty of volume, and it does move more. Let's look at the ATR here. We got, ATR 1.86 versus 1.32. So if you're looking for those ranges, they're there. It's going to be a little more volatile, of course, because of that. But yeah, it's a great market. I don't know. I'm a creature of habit. Speaking of habit, Tom, I'm on day 8 now.
That's great.
Yeah.
How do you feel?
I feel good. I feel
Good.
great. The I'm gonna have a problem at Thanksgiving though, right? I'm gonna have to my body clock is adjusting to this 5:15 alarm clock.
Yeah.
And I'm literally dressed out the door on the Stairmaster 5:31. So it's getting used to that. And I even did it this weekend. I even did it this weekend. By the
That
way, on a yeah.
that's impressive.
Well, yeah, but I have like a little bit of a I have a little cheat going on because my dog is on this medicine and it makes her have to go outside early in the morning, so she wakes me up too.
Well, that's not
But
a cheat.
anyway,
That's
well
adapting to your environment, right?
I guess. But anyway, so Saturday, I will tell you this though. Saturday morning and Sunday morning, there was not one human being in the gym that early.
Now, will they be open Thanksgiving?
It's an anytime fitness. You got the key fob. You go in whenever you want.
Oh, wow. Okay.
Yeah, yeah. Anyway, John Boynton says if you aren't cheating, you aren't trying. I'm trying, man. I'm trying. We'll see if we can keep her rolling here. Oh boy. Last time I did this was I was in Chicago. I'd leave it like I had to drive downtown, and I was at the Chicago Club was my gym membership, and they'd open the door a little bit before 5. So I'd get there, and there's like only a handful of traders that were there that early,
Yeah.
um, and the Nigerian brothers were there every morning. And those guys are characters.
I don't know
But that
them.
was a long that was a long time ago, Tom. So right now, that's the only. Didn't we put another? Oh, we're waiting for bonds to get filled, right? We're waiting for bonds
Yeah.
to get filled. We're just hanging out.
We take a look at the
Um,
E-mini.
yes. You mean S&P up on the screen right now?
Scott from
Wow.
Charlotte says, "What time do you go nighty night, Jim?"
Oh, I'm in bed early. I'm in bed early. That's for sure. I try to get my 8 hours in, so hopefully I'm in, 9 o'clock, maybe 10 o'clock.
Okay.
So, but I would do that anyway, because I'm old. I'm not like a big TV guy. I'll read and fall asleep.
Yeah, me neither.
Gap is here, bud. Still there on the MES.
See that looks like a lot bigger gap to fill, right, than the
Yeah,
Nasdaq in terms
yeah,
of, kind of
yeah.
how big that gap is compared to today's range.
We're
Um,
14 points. That's the
so
size. That's the height of the gap from the Globex
right,
close.
right. So going back to the idea, I think Patch said about regular trading hours close on Friday versus Globex session.
Yeah.
Even the regular trading hours close from Friday is within the average true range of E-minis, right? So average true range target on the downside is about 59.75,
Hmm.
which is right at the pivot.
Yeah. Look at that. That's beautiful. That's some that's some technical analysis for you guys right there. Boom. I'm gonna
So
put a little on there.
so if we were to just show today's trading data, right?
Yeah.
Not Friday's, and we blew up the chart.
Yeah.
This is an impressive move up, move down. We're back where we were before,
Yep.
the regular trading hours. It's kind of, price happiness, right at the open of this current contemporary candle. Then you say we got another 38 handles to get to the pivot. We'd fill that
Mm-hmm.
gap, all that. Crazy. No, we're not going to do that. But it's within the realm of normal trading. Why not? So
Okay.
I'd just be careful. I think your rectangle there, we wick through it on the previous candle, it's not out of play. I think it's definitely in play.
Yeah. VWAP here is going to be key. I'm going to put a rectangle there, a circle there,
Yep.
ellipse there, ellipse. By the way, I think I made an order entry mistake on my crude oil.
Oh no.
Or no, I didn't. Let's see. Oh
Oh,
no,
it's humming
we're good.
along, right?
Yeah, it's humming along. It's humming along. All right, let's go back to the mini S&P. Sorry. So let's see if VWAP holds or not.
Yeah. Yeah, I mean this is almost a bearish engulfing or bullish engulfing. You know, probably not quite, but not so important on the intraday candles. But it is a higher high and higher low. So this, you know, will this be a temporary rally in this overall downtrend to fill the gap, or
Yeah.
maybe that price happiness is where buyers are coming in.
Yeah, and I drew an anchored VWAP too. I started that anchored VWAP. That's that dotted purple line, right? I'm measuring the volume weighted average price since the opening range started.
Yeah.
Uh-oh. I heard the Raven. I so want to get shorter, but I'm not. We had the Raven coming, Tom. So
Yep.
so far so good. We'll keep monitoring the crude oil trade, and we're gonna bring in commodity analyst extraordinaire Sterling Smith. Be right back.
Awesome.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
All right, folks, we are back. Let's talk futures. Joining me live from Nebraska, somewhere in Nebraska, Sterling Smith. How are you, Sterling?
I am fine. Greetings from West Omaha, Nebraska, where while it's sunny, the temperature is falling off a cliff, and we're going to start seeing potentially temperatures in the single digits by the end of the week.
Ooh, I'd have to put out my frost cloth.
Your
to
frost
protect
cloth?
my frost cloth to protect my somewhat tropical backyard.
Yeah, your tropicals aren't going to survive when it gets down to 9 degrees overnight.
Yeah, so it's rare. Sometimes we get down to freezing, and that's when I got to put the frost cloth out just to kind of protect them. It only happens, a few days a year down here, but we're kind of like in that zone 8, but we're just not Florida, right? Charleston's just not Florida, so you got to be careful.
Yeah, careful, but you're not going to get, the 4 hours below 27 at 27 degrees is where you get the hard freeze, where you run the risk of your water hoses and your plants suffering damage. I've tried to grow banana crops here. I can't get a USDA subsidy for it, and the plants just keep freezing over. It's kind of tough.
Yeah. I had to bring one of my bananas in the house, so we'll see if it makes it. But in any event. So let's start with the stock index futures today. I mean, this morning I wake up to this huge gap in the E-mini S&P. All the stock index futures for that matter. The Russell was on a tear. It was up over 3% this morning. Things are starting to pull back a little bit. This was an unusual surprise to me.
Yeah, this was a little bit different. I think part of it's news driven. You can see that crude oil is dropping this morning. We've taken some of the tensions in the Middle East off the boil today. There is, some talk between Israel and Hezbollah, and that there may be a ceasefire with what's going on in Lebanon. No question that's bearish crude oil and bullish stock items, and probably a little bit bearish gold. So we have that going on. That's the underlying thing. If it can hold, that is a good thing. As far as trading this, well, is this going to be a gap and go? There's a lot of money on the sidelines. Most ideas that I've heard that I agree with, I think we could see the stock index. Maybe we finish the year with the S&P 6,200 to 6,300. So That gives us a couple hundred points to run here. The real question is, if you're a trader here, you know where to put your stop. You know that if it goes into that gap, most likely you'll fill the gap. So how I play this, I'd be a little gentle buyer here with a stop and reverse a little bit into that gap, because most likely if we go into the gap, we will fill the gap. So buying it in here, I'm not saying you're riskless, but you have a pretty good idea about how things most likely will behave. Now, crude oil is a whole nother matter. Do we want to talk about the NASI and small caps?
Well, let's do the NASI and small caps really quickly while we're on the subject. And by the way, Goldman Sachs was calling for 6,200 also, so you're in good company, maybe.
Yeah. I think the Santa Claus rally will have some teeth. Now, there's some caveats that come with that too.
What are they?
Well, first, you have a lot of gains over the last 24 months. Assuming we get to 6,200, you're looking at an S&P that's up 45%. Okay, you have to think about tax implications. If you are long stocks in a taxable account, you will most likely will not take profits until after January 1, because basically you get a free loan from the government for an entire year on those capital gains you have to pay. If you are in a IRA 401k situation where you're not taxed, we may want to approach that week from between Christmas and New Year a little bit differently. And maybe we want to go in here and, trim some of those super outperformers, especially like small caps and things. If you have extraordinarily large gains, maybe taking a little bit off of that, taking that off the table, since you're not worried about the tax situation, could prove advantageous, because we could have a situation where things get a little weird through the first half of January, especially seeing exactly what comes out of the new administration. Tariffs are not good for stock markets, and there may be people willing to front run that, right after the first of the year.
Yeah, no, I like that analysis. I do. The micro NASDAQ real quickly here has closed the gap. Mm-hmm. They had the same gap. It closed. We have a doji-like formation right now, a pause, price happiness, whatever you want to call it, on the micro NASDAQ. So directionally, we'll see which way this goes.
Yeah, this could be kind of an either or. One thing, just looking at my quote machine here, I see that NVIDIA is down. Now, when NVIDIA is down, that's a little bit of a problem for the NASDAQ. Tends to be good for the other market, for the other sides of the market, though, because that means money's not just flowing into NVIDIA. So that is a bit of a positive thing. I've also, the dollar index has made a really nasty daily pattern, and a weaker dollar is actually supportive to the stock market.
Yeah, well, okay. So the rotation you talked about, I mean, Russell is on a tear, right? That's the big winner. It's up over 2.25% right now. That gap is there still. It's going to probably stay there today, is my guess. But to your point, it does look like there's some rotation going on here today.
Yeah, we're seeing continued rotation. The Trump trade, the lower interest rate trade, is very favorable small caps, more also favorable to mid caps. I've had some mid cap stuff that has worked really well in here. So if you don't want to quite go into the small caps, but you want to go into the mid caps, you're buying good solid companies. And if you buy one that pays dividends, you may see a little bit of alpha here. These are the things that I would be worried about after the first of the year, though. Your big blue chips, I'm a little less concerned about, simply because they are who they are. But these markets tend to be a little more jumpy. And if you're not in them now and we get a big break, say we set back 7 to 10% after the first of the year, these would be where you probably want to look to be buying, because I do think we'll finish the end of next year higher.
That makes sense. So I have we don't talk a lot about the EMD. This is the mid caps for the S&P. Again, I mean, we're up 2%, and this thing is just, to your point, just moving.
Yes.
So let's shoot over to the January crude oil contract right now. Bearish engulfing. We're trading below all of my EMAs. I have an 8 EMA. I have a 21 EMA. We're tracking lower right now.
Yeah, this market looks like we had formed a pretty good rally. We do have a bit of a tweezer top going on here over the last 2 days, which has proven to be fairly bearish for this. Also, we have a line of support on the daily chart that we're starting to erode pretty well. The fact that if we can close under $70 a barrel, I think that's going to be seen as a little bit bearish. And with an easing of the tensions in the Middle East, normally this level of tension would be more bullish for the market. So the market is obviously already heavy in its own way. We could easily, I think, go down here and press back towards the lows, which would be good for a lot of parts of the stock market and provide a lot of ease, in the interest rate markets.
And does it also kind of ameliorate some of this concern about inflation coming back?
Absolutely. Now, I bought gas yesterday at the Costco for premium. I paid $2.81, which is the least I have paid in a long time. And if we can see, these prices move back again, all of a sudden we're looking, at regular gas, $2.20, $2.30, premium at $2.60, $2.70. That will take a lot of inflation fears off and pump a little bit of money into the Santa Claus rally and into the economy in general.
Well, unless you live in California and you're still $5.
Well, you pay a premium to live in the Golden State. You pay higher taxes, you pay more for gas. That is just a premium. If you want to live out here in Nebraska with no tourist attractions, that premium and that land premium will go away in a big hurry.
Yeah, I'm pretty close to your prices down here. We get it nice and easy, nice and gentle gas prices down here. In the low country, they call it. That's the nickname down here. Any event, let's go to gold. Has just fell out of bed today. This is another bearish engulfing, down almost 3%, $78 so far. Just breaking through all my key fib levels, moving averages, no wick at the bottom of the candle. I mean, when is this going to end?
Now, let's go back to what we talked about when I was on last week. I said gold was coming into a turning point. Well, here is your sign. Clearly, now it looks like we've made a double top on the daily chart where we had the record highs. We came back. We got our bounce. And the bounce is, looking like a serious fail here. Couple of things to remember. One, you have a lot of profits in this. The temperature in the gold market is different than the equity markets. People are used to paying the higher taxes, and short-term taxes are just part of it in there. So you have a willingness to take profits, number one. Number two, we're coming to the end of the seasonal period. December gift giving, a lot of gold gets bought prior to that. That fun period is also over. 3, political de-risking. We know what the administration is going to look like, or at least we have a pretty good idea. Number 2, we have an easing of tensions again in the Middle East. So we're seeing a strange day today where the dollar is lower and gold is lower, which is not normal. What that tells me is we are seeing de-risking. People are willing to buy stocks. They are looking for other assets other than gold and crude oil to buy. And this could very well, we could see, this could be potentially the end of the big bull market in gold for a while. We could be in for a setback. And if we see, stabilization come to the dollar and interest rates begin to stabilize but gently work lower, this could be something where the gold market could end up, its own weight could start falling on it as the long positions become less and less profitable. This isn't, a stock where you're getting a dividend or things and you can hold it for 3 quarters. Gold begins to fall apart, tends to fall apart in a hurry. And we're seeing that today. And as you can see on the chart there, we've had 3 such sessions of less than happy performance. We'll put it that way.
Yeah. Well, today, when I woke up this morning, I was like, oh boy, here we go.
Yeah, this could be the potential start of, dare I say, a bear market in gold.
Yeah.
And they do exist and they can happen and they can be quite painful when they do.
Peter Schiff is not going to be happy at all.
Oh, I remember once upon a time back when I was at Citibank making a bearish gold call and saying it had entered a bear market, and I hit the ball right on the right in the center there. That one went right down the middle of the fairway, but there were a lot of people who were very unhappy with me.
Calling it like it is.
But again, what I'm looking at here, I see the potential, and once the momentum shifts, again, the profit structure in a futures market or a commodity market is completely different than it is for an equity market, and the behavior can be completely different.
Yeah. All right. Well, now let's keep rolling. Let's do a 30-year Treasury bond. This is the longer end of the yield curve right here. We had a trade idea going on. We did not get filled, so I'm going to cancel that. But this has been a big sell-off for a long period of time. The long end of the yield curve. Right now, the actual 2 and 10 yield curve is getting close to parity right now. We could take a peek at that, but looks like we're bouncing off a bottom here pretty nicely.
I think we're making a bottom here in rates. I think, there are the concerns about, the deficits and the debt and everything like that, and that have given the bears a lot of fuel. The reality is, if we see lower energy prices, inflation relatively contained, the new administration is going to want to pressure interest rates on the front end of the curve lower, and it eventually will hit the rest of the curve. There may be some kicking and screaming involved, but it does look like to me that interest rates could turn. We could see rates go lower, dollar go lower, gold go lower, and the stock market going higher. While it may seem in some ways a little bit contradictory, that appears to be the condition and situation that we're setting up probably between now and the end of the year. Okay.
Why is the debt ceiling necessary? It's redundant, isn't it?
Again, it's political theater. If they actually followed it and stuck to it, then it would have some meaning. Like here in Nebraska, we're looking at a potential budget deficit. The legislature by law has to pass a balanced budget. So that is control. They put this in place to try and, obviously rein in the debt and rein in spending. But when they figured out that they can just vote around it, it just becomes political theater. And it allows for the talking heads on television, who are politicians who work for us, to find something to talk about and, raise the rabble about it, rather than really doing something effective looking towards good government.
Yeah, but it's the same body. The Congress says, all right, here's how much we're going to spend. Here's our budget. Here's what we're going to spend. And then, oh, by the way, our debt cap is here. Those two conditions both apply to the same body. Get rid of one of them.
Yeah. And let's actually have a budget. Let's actually have a real hard budget. I know here at my house in Omaha, we have a budget. We strive to hit those corners every month. That's how it is. Why the government seems to think that they don't have to is, one problem. And the other problem is the party that's out of power always runs on how we're going to balance the budget, how we're going to do this, this, and this. As soon as they take over, it's like, let's go on a shopping spree, or we'll cut taxes, which is the equivalent of a shopping spree, and not bring the budget in and get the situation, at least on a tractable path to getting under control.
Yeah. Well, all right. Enough of that. I mean, this was something that was established in like 1913 for completely different reasons. But in any event, here we are.
Well, remember, the pattern of this country has been borrow, inflate, work your way out of it, borrow, inflate, work your way out of it. Yeah. And that's been the paradigm since, the mid 1700s. I wouldn't count on it changing too much.
Yeah. So probably not going to be an issue. I think January 2nd might be the date. They got to kick, and basically what it is right now, it's been suspended. So in essence, just keep it suspended.
Yeah. Just let's all quit pretending and let's try and do something that actually leads to something that will actually work.
Why would we abide by this? Forget about it. We'll just suspend it.
Forget about it.
Forget about it. All right. Anyway, they're coming to my house for Thanksgiving. Maybe that's where they get that attitude. But what else do we want to talk about? Any other markets that you think we got to really focus on?
Well, let's see. Crude and have we pulled up a daily dollar index chart here? If you've got one, let's pull that up.
I have another. I didn't log into that account. Sorry, I don't have the dollar. We could pull up a euro chart though. Let me just get a.
Let's pull up a euro chart. That's about 50% of the dollar index, and that will give you a reasonably good picture. Okay, if you think about the dollar index, just it's this just inverted. Now, as you can see, obviously the euro has taken a severe beating. If you are planning a trip to Europe, here is your chance to buy it. There's a lot of good Black Friday travel sales going on all over Northwest Europe, Christmas markets, things like that. Here is your chance because the euro is very cheap. Now, the dollar index had a big spiky pattern today where it looked like it had made a peak and has come back off it, kind of the inverse of the stock market and the inverse of this. This looks like to me something where we are going to get a bottoming pattern. Now, you mix this with lower interest rates, that should naturally pressure the dollar and should work to make the euro higher simply because we are clearly, well out of balance here, given, we've done down 7 of 9 days, which is just excessive for any sort of movement. And we may be slowly entering a paradigm where the Trump administration is going to want the dollar a little bit lower. A stronger dollar is hard on the stock market. It's hard on farmers. It is really not, while everyone thinks, a strong dollar is good. No, a steady dollar is better. And I think from these levels, we need to push it back some.
Well, it matters from an export point of view also.
Oh, absolutely. And remember, who's a big exporter? Well, farmers are a big exporter. Who else is? Microsoft. They export huge amounts of intellectual property. And when the dollar becomes strong, their product gets more expensive overseas and they sell fewer units. So it hits all sorts of things that just not just the traditional things that we think about when we think about exports.
Yeah, and I think the ECB's next policy rate meeting, I believe it's December 12th, and then FOMC follows about 5 or 7 days later.
Right.
So it's like, all right, you go first, and then we'll go second, but most likely maybe 25 basis point cut by each of them.
I would expect modest cuts. No one wants to risk inflation. And again, with the new administration coming in here, gentle easing is probably the easiest thing, as you don't want to upset the apple cart. And then we'll see where we are when we get out towards the spring, as long as our economy remains quite resilient. Europe is struggling a little bit, but their economy, their whole situation is a little bit different. So it's a bit of an apple and oranges comparison as well.
Yeah, well, when I think of the ECB, I mean, they have how many different sovereign countries to deal with? I know we have states, right? We have 56, right, but they have sovereign countries with different cultures and different, different debt structures, unit by unit.
If you look at Northern Europe, if you look at Germany, the Netherlands, we'll throw Belgium out of this, but you put France there, you have one economic paradigm. You look in Southern Europe, the economic paradigm is quite different. The debt structures are different. And these are in fact sovereign countries where, you're not going to see California issue its own currency, or Texas, for example, issuing their own currency. It's just not part of the program, where that is a bit of a risk with the ECB, where it is not fully politically unified either, where the United States, despite our divisions, is in fact legally unified.
Yeah, you've got the guy from the ECB member from Greece. I can't pronounce his name. Said literally a couple of days ago, said we should cut interest rates every single meeting going forward.
Well, I'm sure when you're in Greece, you probably feel that way. If you're in Germany, who the Germans despise inflation more than anything, it is a cultural thing for a lot of historical reasons. They despise inflation, and they are going to obviously want to remain a very tight policy. And if you think about, population, Germany is the equivalent of California here. France is the equivalent of Texas. So in terms of size, where Greece is, kind of like, well, it's bigger than Rhode Island, but, maybe Kansas, by comparison.
Yeah. And by the way, I think Texas might actually try to issue their own currency at some point. You never know.
Well, you could have your Dallas Cowboy Bitcoin with a star on it, and it may struggle, and you could base it off of how many points the Cowboys score.
Yeah. Well, yeah, it wouldn't be. Yeah, that won't be worth very much.
Well, you want to start cheap. That's one of those things.
Yeah. Let's just real quickly look at the yen. Yen is continually in free fall here for my whole adult lifetime, I think. This isn't looking this is looking like it's just scraping the bottom here. Like we're just channel bound sideways at the bottom.
Yeah. And you may be due for a little bit of a bounce, but I would expect range bound trade. Maybe the bottom of the range is a smidge lower than the low here, but I would not expect anything going great guns from here coming out of Japan anytime soon. One thing with lower energy prices and some wobbly commodity prices, we might want to look at the loonie.
All right. We got the loonie right here.
Oh, dear. Wow. Oh, dear.
Yeah.
I haven't. Yeah. Toronto is on sale.
Yeah. If you're going to Canada, get your loonies right now.
Yeah. You'll get a good rate at that ATM. Where are we at? Where is that low at? I can't quite see on your chart there.
All right. So the actual low, it's almost a tweezer bottom, not quite. We're talking spot 7096.
So 71. That is some very cheap loonie there. Yeah. Again, this looks very heavy, and they are an export heavy economy in many ways. Lumber, crude oil, major exports, metal exports. The Canadian economy is something that could struggle if there are trade problems here. So normally I kind of look at this chart and I might feel, maybe you could be bullish on a lark here. Given the overall situation, not so much, especially if we see energy prices right now, 70 is in question. If we can't hold 70, I think we could go to 65 on crude. We could see, timber prices having a problem if we do have some trade issues. So that could be something that could be a little hard on the Canadian dollar here.
And has there been chatter about tariffs with respect to U.S. and Canada?
Well, Mr. Trump, his track record included, tariffs on Canadian lumber and Canadian timber. That has happened before. So don't be too surprised if something like that does in fact come up again. We'll see, just exactly how this all plays out. Some farm organizations came up this morning. We're talking about how they want to be exempt from the labor issues and the deportations. Now, the housing market in this country, we need to build houses. We are short units. So perhaps there would be a little less tension about importing timber. Again, we'll just see how the administration plays this about and how much is smoke and mirrors and how much substantive stuff actually hits the road here.
Yeah. All right. We'll keep our eye on that. I think crop progress regular report out today.
Yeah. And this one will be a very small version. We'll be talking about wheat getting planted and wheat getting conditioned. About 100% of the winter wheat is planted. So we're done with that. Condition right now is 50% good to excellent. And what winter wheat is, for people who don't quite know, no, it doesn't grow in the winter. What happens is it gets planted in the fall and then it goes to sleep for the winter and pops up in early spring, not to be confused with spring wheat, which gets planted in the spring. So we're looking at this, and conditions right now are not all that important. They're not going to have a big bearing on what happens, when we wake up and come out of dormancy.
Awesome. Well, Sterling, I appreciate you spending time with us this morning. And hopefully, I know you're bracing for a little bit of cold weather coming here. Hopefully, it won't be as bad as you think.
Well, you got to get used to it. So I managed to get golf in almost to Thanksgiving here, which that's pretty good. So we'll take the cold. We're ready for it.
All right. Awesome intel as usual. Sterling, looking forward to talking to you again soon.
Thank you, everybody. And if you need to reach me, reach out on LinkedIn.
All right. Or just shoot me an email, learn@ninjatrader.com. I'll put you two guys together. Coming up next, we have Traders Workshop with Tom Schneider, Anthony Drager, Edge Trading Group. Do not move a muscle. They will be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit ninjatrader.com to get started today.
And welcome back to Ninja Trader Live. I'll be your host, Tom Schneider, CMT, with Ninja Trader. This is Traders Workshop, where we like to bring in our ecosystem partners And today we are so pleased to have back on Ninjatrader Live Anthony Drager, founder of Edge Trading Group. How you doing, Anthony?
Morning, Tom. I'm doing well. How about yourself?
Doing well. How's the weather where you are right now?
I don't go outside much, so I don't know. I'm usually in Florida this week for Thanksgiving. This is the first time maybe in 25 years we're not.
Wow.
So it's 70 there, and it's typical fall, probably in the 30s, 40s.
I just have to ask whenever I talk to somebody who's living in Chicago, as I left Chicago about 25 years ago, and just have to compare. It's not that much warmer here, but I think you have the right plan going down to Florida for the Thanksgiving when you can.
Well, like I said, the last 25, 30 years, that's where we're at. But then that hurricane hit, and it not everything is back open.
Okay.
So the key that we go to was ground zero. That's where that hurricane hit directly.
Wow.
And it was pretty scary. It went right over our building. Like the center and the eye went right over our building. And yet there was less damage done to the key than the hurricane that had missed a few miles offshore. So it was kind of weird. Didn't do as much damage as you would have thought. But that's why we're here and not there this time. So.
Well, hopefully, that gets back to normal pretty soon. I know, kind of had a double whammy within 2 weeks, two storms, and not good.
It kind of segues me into what I was going to talk about today, and that's why I had you pull up a 2-minute chart. People could see that chart, Tom?
We can bring that in. Yep, now we can see it.
So it's like I did last time you and I were doing this, I promoted a webinar, and a lot of people had come to it. And so later on, if you push that link out to people, because I recorded it, and it was like the golden rules to reading order flow and things that most people don't know and should know about why price moves, So if you just look at the simplicity of where a fifth grader would want to exit a long trade, let's say, and if you could look through the eyes of a fifth grader, and the reason why I say that is because look for the obvious and do the opposite. Like if a fifth grader would say, yeah, I'm going to stay long until it gets below this price. So if you put your cursor over that swing low at 9:30 your time, look to the left, right there. So that swing low, okay? And now go to the right and the swing low, 30 minutes low, right in there, okay? So there's a couple spots that before all the downside happened, you should be able to say that the fifth grader is going to be nervous below those prices. And so what do most people put to exit a long position? What order type? A sell stop.
They're going to put a sell stop, right?
Exactly. People need to look and read order flow through the eyes of how people use these order types. So if it's fair to say most people use sell stops to exit a losing long position, it's fair to say that, right? Most people would agree. Then it's fair to say that if there's a lot of sell stops in a particular area, what happens is it becomes a magnet for price. Price is drawn to a lot of sell stops if there are a lot. And so now the question, well, why? Why would that be? Well, think about this for a second. If you're long, I guarantee you most people, whether they've been trading for 5 years or 5 minutes, they use a lot of OCOs, order, cancel order, right? They're long and they put their sell stop below for their loser and their sell limit above for their profit target. Makes sense? A lot of people do that, right?
Right.
And what happens if there's a lot of sell stops? That means it's easy to say or fair to say there's a lot of attached sell limits with that sell stop, right?
Sure.
So if there's a lot of sell stops in an area, then there's a lot of sell limits above where price is. That very well could create pressure on price to drive it right into the area where there's a lot of sell stops. And therein lies why a lot of sell stops in an area become a magnet. It's like a self-fulfilling prophecy. And price is driven right into a cluster of sell stops for that reason, that sell pressure. And lots of longs, lots of sellers, and you could see why price would be under pressure. So a lot of people take it personal. I know I have in the past. When you get stopped out of a long and then it rallies, You know, they come right back. They come right down to your price, shake you out, and then it goes up. And that's frustrating. But you got to learn not to take that personally, because the reason why that's happening generally is because you're putting a sell stop around other people, or there's too many people long and too many people using that area to, to place their sell stops. So hopefully that progression makes sense, and why you want to know or have a good feel where there might be a lot of sell stops in the market.
So, Anthony, what's the solution to that? Because if I'm, like you said, fifth grader, I've got, okay, maybe I go long and I put my stop right here, right? And it's below this wick, and eventually we get stopped out. Is the solution to that widening that stop, anticipating a lot of stops there, and if you want to survive that trade, in that trade, you widen that stop out? Or is it more of a thinking of, boy, if this happens, it's really, if I get hit by my stops, other people have stops there, it's really going to accelerate that pressure when we get there. So maybe this isn't the right trade to be in, or what's kind of the solution to that?
Well, if you're getting your stops hit a lot, you got to get better. That's number one. You're picking bad locations, probably to get long, and probably picking bad risk management locations if you're always with everybody else. Two obvious spots. You got to turn and flip around and be less of the prey. And so you don't want to be in a popular area that's obvious, because other people are going to be putting their stops there. So that's number one. Find out what's obvious. Try not to manage your risk there. I wouldn't advise people ever to widen your risk parameters and say, oh, you're getting stopped out, you got to risk more. That's the wrong approach. You got to get better at having a probability with your bias, and then get really better at your location. A lot of people think it's up or down. That's where your skill is going to be. It's actually not. Your skill has to be in location. So you could tell me the market's going down and be right, but lose money. I could say the market's going up and be wrong, but make money or break even. So it's about location. Yeah, bias and your opinion as to where price is going is important, but location and your timing is the most important thing. And I think a lot of people, Tom, they just work on trying to predict up or down, and then they don't realize and put any emphasis in practice into the timing of that execution of that opinion. And that's where they're putting their stop in the wrong place, or they're just getting long or short in bad areas. So again, that's a general answer. To be more specific, yeah, you don't want to think that your sell stop in this example is where everybody else has their sell stop. Mm-hmm. And maybe you want to think of being bearish, where you could run a short position into sell stops and get them to chase. This price action that went down from 10 o'clock your time all the way through now, okay, all through there's a reason for that. Sellers are chasing. That's why price goes down. Sellers have to chase. They're not necessarily always getting filled, but they're trying to, and they're all willing to sell it at lower prices. So you have to use that as a way to get a short position to work for you. You got to get sellers behind you wanting something you already sold. That's the only reason why short position would work or become profitable. So you got to flip your bias around. Know the obvious and think of the opposite. Know the obvious and think opposite. And then work yourself into, hey, you could be long right above where there's sell stops, but know that your heels are on the edge of a cliff, as I like to put it. It's fine, but know so you could react better, so you're still not long after they took out those swing lows from 8:30 and 9 o'clock Central Time. Know that, listen, when you're surprised a lot, then you don't know what you're doing. You have to minimize the amount of times you're surprised about what happens. That doesn't mean you're never surprised, but you have to minimize and strip the randomness out. I think trading is too random to most people, even guys that have been trading for a while that haven't been successful. It's too random. And when they're right, they feel lucky or they guess right. You can't feel that way. There has to be probability, and you have to put yourself in a position where, yeah, we were talking about it in our room this morning that there's a lot of sell stops below, I think it was 18, 19 in the S&P. and do not belong into that, because you could be chasing with the rest of them. And then you think of maybe playing it from the short side so you could capture that momentum, because there's going to be a lot of longs that are chasing. Guess what? Price that goes down is because sellers are not selling it. They're trying to sell it, and they just can't get it. So hopefully that's helpful.
Yeah, that's capitulation, right? It's more sellers than buyers, and the guy next to you is going to sell it a little less than you can. They'll take less, for that price, right? What do you think? Okay, so kind of getting back to that idea of what's obvious. I look at a chart as a technician, and I see this downtrend since those highs that you mentioned, right? 8:45 Central, 9:45 New York, and I see this downward trend. And it's a little bit of cherry picking because I'm using the high here and then a recent high about an hour ago, not even an hour ago. I'm used to 10-minute charts, so forgive me. About 20 minutes ago, whatever it is. So my point is this. Is this an obvious resistant area, right? We talk about support and resistance, putting stops under a buy sell stop under a support line, or maybe a buy stop above a resistance line. Do you use trend lines like these to say this is obvious, or is this something that is really reflecting the seller's behavior of being a little more agreeable as time goes on to sell it for less price?
Well, answer your first question. No, I don't use trend lines, but I don't judge people who do. The first obvious thing to me is what we call congestion boxes. So if you draw a line underneath the two lows and kind of the rotation lows on that chart that you have, so that's to me starting to become out right in there, right? So that's becoming the bottom of a box. You could actually see the box in a way forming with the highs, right around there. So if you think of a rectangle, so what is the market doing in that rectangle? It's found balance, and it's not getting people who are long or short paid. It's not moving. It's often getting people chopped up looking for a breakout, but it's not breaking out. So when markets find balance, that's buyers and sellers always being able to shake hands. It moves sideways. That's what it's doing, but it's not going to remain sideways. Once it gets the imbalance of positions, once it finds an imbalance of positions, now it's found an imbalance of buyers and sellers. And it goes back to every time I'm either on here or do YouTube videos. If you're long, you're a seller, and if you're short, you're a buyer now. So if you have an imbalance of longs and shorts, then you have an imbalance of buyers and sellers. And if you just walk yourself through that. So if the market, and when the market finds an area in here where there's more longs, enough longs, like an imbalance of longs to shorts, it has its best chance to break out to the downside. All right, that's number one. Number two, it's not only safe to say, it is very accurate to say there's always people long and short in this chop, right? There's open, long, and short positions. They're pretty much balanced. That's one of the reasons why we're not moving. So you got to find an imbalance of buyers and sellers by first finding an imbalance of positions. Now, when you see the bottom of this box that Tom has drawn with this blue shade, this is the point of a fifth grader would say, yeah, mommy, I'll put my sell stop below whatever price. What is that, 08?
Right. Yeah. 06. Yeah. We could maybe put it at 05, right?
05. So yeah, she goes, okay, Johnny, put it at 05 and you'll be fine. Don't come crying when you get stopped out again. That's Johnny. He's putting his sell stop there. That doesn't mean you can't be long. It's just be cognizant that you probably have a lot of longs that are going to get trapped, and you don't want to be trapped with them. Doesn't also mean you got to get short playing a downside breakout. It just means that you're going to have a lot of sellers coming in. And if you want to get long, let them get beat up, get shook out, and then bounce back into the box and now fight for your long position. Right. Let them get shook out. Weak longs, you don't want with you if you're long. You don't want competition. Shake the little Johnnies out, and that's called a head fake. It had to go down to go up. What that means is now if you come back into that box after shaking out longs, you have less longs in the market. If you have less longs, you have less sellers above. If you have less sellers above, for the price of anything, it's going to be easier to go up. So you want less longs. You want that dynamic to play out. So again, right now, a way to keep yourself from getting chopped up is anticipate. It's midday. It's a holiday week. You could kind of not be surprised that we're doing this right now. We had some good first hour movement, and wait for something to happen. I'll tell you this quick story. When I was in the pit, when I got back to the pit in 1996 before computers, the guy I worked for was a Eurodollar trader. He's about 15 years older than me. I'm 22 years old. And I just worked for him. So when he left early, I left early. And he's standing in the pit and nothing's really going on. It's like 9:30 in the morning. And he's looking around and I go, "Hey, Bob, what do you think?" He goes, "What do you mean?" I go, "Where are we going, up or down?" He says, "I don't know." I said, "What do you mean you don't know? You're a professional trader." He goes, "Because you don't always have to have an opinion. Now let's go golfing." And we left the pit and we went golfing. But I always remember that because he gave me an answer that I was kind of surprised by. There's most of the time you don't know where price is going. Don't try to figure it out because then you're going to force a trade because you're forcing an opinion. Stop forcing stuff. Let it come to you. Even if you maybe should have an opinion. If you don't, then don't force it. Sit back. Let what's obvious, let the other people get trapped by the obvious. Right? Trading is so much more about opposite conventional wisdom. So you have to start thinking opposite in ways that you're used to. But it isn't as difficult as people might think. It's just that they get distracted with a lot of rabbit hole education and they don't get back to why price moves. But let opinions come to you, and who cares if you're wrong because you're supposed to be. And people get so hung up like, well, I think it's going to go down if it breaks out the 06s and 07s, and then it doesn't. And I don't, and you think I feel bad about that? No, I'm supposed to be wrong sometimes. I'm not taking it personal. I'm not insecure about it. It's just like, oh, I thought it would break out with more downside momentum because I thought there were more longs in this congestion box. Apparently there wasn't. I managed my risk, got out before it ran on me, and it didn't break out, but you move on. As long as you have that progression of logic to say, okay, it makes sense why this guy thought it was going to go down. And it just didn't. There wasn't enough imbalance. Fine. He got out, managed his risk, did what he said he was going to do, and he's still not short 10 points higher. And he was supposed to get out every other point, and he's breaking all that discipline. That doesn't work. But being wrong is not only going to happen, it's expected. You want to thrive on being wrong and be good at being wrong. I know it's hard for people to wrap their head around that because it's opposite of how we live our life. And if you're wrong a lot as a CEO of most any other company, you're going to get fired or the business will go out of it. Or if you're wrong a lot as a doctor, you're not going to be a doctor for very long. But boy, you're supposed to be wrong as a trader. Work on your timing and not your opinion as much as people work on. So that's just it. It's like, my thought is right now, I don't want to play a downside breakout because it's midday and I don't think there's going to be enough momentum to keep it going down if there's no news behind it. What I would look for what I need to happen is for the market to surprise participants at this point, which means I would look for it to fake like it's going down and then jump back up. Then I'd pay from the long side. Or the other way, I look for it to break out the top of that box that you just drew and then drop back into the box and play it from the short side. But I need something to happen before I start thinking about executing. Because right now, there's nothing going on. Why force it?
Yeah, and it seems to me that consolidating periods like this one are probably the toughest ones to trade, right? Because if we're not seeing an imbalance, it's hard to see which way the market wants to go, right? It's up now, right? And maybe we'll get to the top of our rectangle. And what happens then? You could try to play range-bound trading day, but that's also difficult too, because again, when are we going to see those imbalances come in, right? Is it going to be at the top of the box? Is it going to be at the bottom of the box? Is it going to be in the middle? Or do we see it at all?
I hate playing the range. I never tried it. I don't get good at it because it's almost like you have to anticipate that's going to be the top of the box before it's the top of the box. So what you're trying to say is the market's slow, so I'm going to sell the top and buy the bottom, and life is good. But you're invariably going to get caught, and I never liked that. That's not my style. It's okay if it is for other people, but it's like everybody is maybe trying to do the same thing, and so I never got caught in. I'd rather look for a breakout near the top. So instead of selling the top to get short, I'm looking to buy it for it to follow through and break out and get other shorts chasing it. And that's the very reason why the price would rally. But what you need is not just the opinion it's going to break out to the upside because the box is set and this is the top. You have to, number two, have an understanding of why it would rally. Okay, enough shorts are trapped and they're the buyers that are going to be chasing it. But when would this be the moment it's going to break through the top instead of the other 2 or 3 moments that it didn't break out through the top?
Right.
And that is the trigger moment of that's the fire and ready aim fire. What's your fire? My fire would be if I'm looking for a momentum trade near the top of a box to get long because it's going to break out to the upside, would be a moment where shorts come in trying to do what you're talking about, and we have some tools that show us some smaller time frame shorts are coming in. So that's number one. We have buy and sell imbalances with triangles that show that, oh wait, there is some sell imbalances, but the market doesn't care about it, and it's starting to breach these pink triangles. It's like, so the market's giving these sellers what they want, and now you take those two things and you create, well, you're getting more shorts, good, that's what I want if I'm long, and I'm getting sell imbalances to get rejected. Okay, that's good for upside. And then maybe you get 150 lot sell pulse, which is a sell market order that a lot of platforms have, big sell and buy orders that come in.
Right.
But think about this. You're near the top of the box and you get 150 lot sell market order and it doesn't move price any more than 1 or 2 ticks down, because a big sell market order should move price down.
Right.
And if it doesn't, that means it quickly got absorbed and then it's getting rejected. That's my metaphor. If I punch a guy in the face and he doesn't blink, I'm running the other way, right? That's a big sell market order that comes in and punches price in the face and price doesn't blink. Upside's the right side, or the probability of upside is the right side is with you, or you could stack those reasons to set probabilities in your direction. And guess what? If all what I said doesn't work, get the heck out and try again, right? You might have to battle once or twice before you get that upside, or maybe you take a shot, doesn't work, you get shook out for a small loser, and then you go in to try to buy it again and you miss it. And that's fine. That's going to happen too, because momentum happens when most people miss it. So if you're looking for an upside breakout, I guarantee you, if it does rally and breaks out, most people missed it. That's the reason why it broke out, because there weren't a lot of longs buying it and then subsequently trying to sell it a few ticks higher. So again, most people miss good trades. That's why they were good trades.
To your point about the big order coming into short and it doesn't move the price. I mean, if you put yourself in the shoes of that big order, right, and you put in 150 to sell and the price doesn't go down but 1 or 2 ticks, now you're sweating. And now you're thinking, did I do the right thing? Am I going to be buying this back, right? Do I buy it back now, or do I buy it back when I've taken a little bit of heat? Regardless, whatever it is, that's a bullish environment. And, now extrapolate it to the average trader, right? You'd want to be on that long side than that short side if the price doesn't go down with a huge order.
Yeah, and I don't try to assume too much if he's selling to get short. Is he selling to cover a long? Is he selling to spread it? But that progression of thought that you're articulating is the way to think about it. If he was selling it to get short, now he's short 150 and price, he's got no head start, and it's back to where he sold it, maybe a tick higher. Yeah, absolutely. He's now what? He's a buyer, and he's a buyer for 150, and he's not getting the reaction he needed, wanted, and he's part of the reason why it would break out to the upside. It's the rejection of what price should do, but it's not. That's a clue. And if people don't know what price should do, then they're not in front of clues. They're not giving themselves the opportunity to read the market because they don't know what should happen versus what is happening. And man, I'm telling you, big buy and sell orders that get the market to go up or down like they're supposed to, there's not great information there. But when it doesn't, that's the clue. And as traders, we're looking for clues. And generally, the clues are not hard to understand if you put yourself in a position to ask the right questions. So the reason why trading is harder than sometimes it should be. And I'm not saying it's easy, but the reason why it's even harder is because people never get themselves in a position, Tom, to ask the right questions. They don't know what the right questions are. They're always thinking the right answer, up or down. Oh, this guy's great. What does he know? No, it's the right questions of, yeah, I could see why most people would miss good trades. And that's the reason why it's a good trade. Oh, I understand when price should go up and it doesn't, it's probably bearish now, right? And it's the market not telling you what it wants to do, because the market doesn't know what it wants to do either. The market is in price discovery mode. You know, that's a phrase I remember hearing when I started. Price discovery, what does that mean? And it makes sense that it's just looking for balance. Price is looking to find balance so it doesn't have to move. So you need to do your job, and the best job, to put yourself in front of tools to spot ahead of time that this is where the buyers are going to come from, that makes my long position good enough to rally. That's what makes me so special, that I could buy it at 18 and people are going to come in after me to buy it at 19, 20, 23, 24, so I could sell it at 25. What makes me so special? The dynamic we just ran through.
Right.
Shorts that are stuck and now they're chasing to buy it.
Awesome. Anthony, we've run out of time, but where can people find you?
You know, I shot a link in there. Maybe Jason has it, if you don't mind. Just, that's a recording to the webinar that I promoted last time I was on here. I recorded it. We had a nice attendee, but obviously a lot of people here today weren't here a few weeks ago. So if you pop that in, watch that. That's not only a link to a recording of a webinar I did, it's only like 45 minutes or so, but also the channel. That's the best way to find me. Edge Trading Group. Search that on YouTube. There's a lot of 5-6 minute videos. And the one, though, if you pop it in, is about 1 hour, and it goes through the 4 golden rules of why price moves. And I think the reaction is people really liked it. So it's your best bet.
Awesome. Thanks for that, Anthony. Want to wish you and your family happy Thanksgiving, and we'll see you in a couple weeks.
Thanks, Tom. You guys as well.
All right, thanks. We'll take a quick break. We'll be right back. Midday wrap up with Mike Burke. Stay tuned.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Better futures start now with the Ninjatrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at ninjatrader.com.
Join over 800,000 users who trust Ninjatrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Welcome back, everybody. This is Midday Wrap-Up. I'm Michael Burke, Ninjatrader, joined by Tom Snyder, CMT. Tom, thanks for being with me.
Mike, my pleasure. How you doing?
Good, good, good. Great session with Anthony, as always.
Yeah, that was fun. He really knows his stuff. Really like talking to him.
There's an interesting dynamic going on today. Russell is up 2.2%. That's an all-time high, by the way. And this will be an all-time high close if we can stay up here. Pretty amazing. Russell finally got there. Didn't think it would get there this year, but it did.
It caught up, right? And you're right. I mean, you compare it to the other stock index futures, it's what is it? It's almost triple the Dow and 5 times the other two in terms of gains, percent gains today. I think a lot of that was the gap though that happened over the weekend.
Yeah, exactly. This is the 5-minute. I mean, the U.S. session had a big run. We're up almost all of this move when the U.S. traders came to work. But if we scroll back a little bit here, you can see that gap. Mm-hmm. So basically, we closed right at the high on Friday, and then that gap up. Little quiet over Globex, but that gap up was right at R1. Kind of stuck a little bit at R2 earlier today during the open R2! And the opening range, and then another nice leg up.
Yeah, this is really interesting because you have two forces going on here. I think I pointed it out with Jim, but Friday's closing at the high is follow through, right? We want to see follow through today. But also you have a gap, which tends to be we want to fill that gap. And today the Russell, the bulls won out. I don't see this closing the gap unless something dire happens at the end of the day.
It's interesting if you look at the volume here at the bottom. We were kind of just normal volume, and then once the bell rang, everybody piled into the Russell, and you could see the momentum shift from NASDAQ into the Russell. And normally we'd be at about 80,000 contracts here. This is the big RTY. We're at 117 right now, so that's a pretty substantial 45% more volume right now than we've seen over the last 8 sessions. So it's a nice start to the week.
You wonder, Mike, if Russell got the hint when at the opening range when bonds were up 1%, right? The 30-year bond futures were up 1%, and the same, the direction of the bonds seemed to be what the Russell is in alignment with. So if bonds are up, Russell should be up as well. Not always, 1-to-1 correlation, and doesn't always happen, but that's generally the paradigm. And I think might have been what happened. The institution said, "Holy cats, bonds are up 1%. Let's buy the Russell."
It's interesting because that 10-year yield is down 2.5%. And I think the Russell was up 2.5%, I think, at the high or around there.
Right.
So yeah, I think this market is keying off a really substantial move in bonds today. Bonds are up 1 1.33 right now. So it's a nice rally in the bond. Let's take a look at that contract on the daily chart. So this is the 30-year, and this is the daily chart right here. So you can see that we've been in really a downtrend, a strong downtrend. Actually, we bottomed out below some of those lows in June and July. But this is when they started cutting rates,
Right.
kind of the opposite of what we thought would happen, which is a good lesson learned, I think. And today we're seeing a nice gap up, just like we saw in the stock market. And, we're getting close back to that 115, I'm sorry, 118, which I think is probably going to be a strong resistance level. I think that's where the market wants to get to, though, that 118 level.
Yeah, and you pointed out, right? It's very obvious, or very, I don't know, obvious is the right term, but the turnaround in the bonds was when we went 50 basis points in September. We went 25 in November. It's hard to separate from the election results, but it looks like 25 basis points might have been a good call. And the market is, I think, bonds down is a little bit of, or bonds up rather, rates down is a little bit more stability. That this market is thinking, hey, maybe this is a little more. The Fed has it right a little bit more. I don't know.
It's interesting because I think watching the bonds rally here a little bit tends to make you think that, okay, maybe inflation is under control. Maybe the Fed has been on the right track here, and then you have to weigh that against some of the comments coming out of the new administration, tariffs and lower taxes, all of these inflationary kind of policies. So there's a balance going on here. I'm glad to see the bonds rally today.
Yep.
So I guess obviously the Russell's a big story. Gold is a big story today. You guys were talking about gold today, down almost 3%. Silver is down over 3%. We're at 2661. This is one of the larger down benchmark candles that we've seen in a while. We saw a big one in early November, which may have been a warning sign, by the way. But we saw this. We see this candle today. We kind of just peaked above that cloud on Friday, and then boom, we're all the way back through. We've crossed the 2 moving averages. Here we've got a 21 about to cross the 50. I think that's happening. That's probably happening today or tomorrow. So again, pretty bearish here for gold after a nice little pullback rally.
Yeah, I think Jim and I were talking about 2640. We were invoking your concept of 20-point levels, right, off of the 100 level. So 20, 26, 20, 2640 kind of were discussed, and it looks like today that we're right at 2638 on the December contract. February contract is a little bit higher, right? What are we at? We're at
2660.
60. So, you've got these 40, 60 levels that are pretty important. This is risk off. I mean, risk on, right? Risk on environment means let's get out of gold and put it in equities. That's my take.
Yeah, it's interesting because, we've seen just an incredible run this year, and I would have expected a pullback, not as big as we see here. That nice rally the last week or so kind of was against everybody's expectations. But again, today, we're seeing a big down candle. It's not on a ton of volume though. We're about half of what the volume should be today. So that gives me a little bit of a glimmer of hope here that perhaps this big down move is more a rotation today out of this market and into equities. And we'll see if that's long-lived or not. Cumulative delta is positive. It's been positive for the last hour or so. So maybe we've seen the worst of it today. At least that's what I think. We'll see.
Yep.
So a little bit of calming news in the Middle East. Crude oil is down about 2.5%. Again, another big benchmark candle. Every time we get above that 70, 71 level, it seems like it can't really get much higher than that. We see sellers come in, and again, we've seen that again today. We're back under $70 a barrel.
And I think, going back to your, I think you have 72 marked on there. You could extrapolate that to 71, but it looks like we haven't really traded this, like you said, keeps getting knocked down, except for some geopolitical events in the Middle East in early October. This market seems to like crude under 70, 71. I think you're right. I think this is still game on for bearishness.
I agree. I'm anticipating that, if everything stays on track in the Middle East, we can kind of calm Ukraine down a little bit here. The real level for crude oil, I think, is 65
Wow.
or less. So, I'm pretty bearish this market. And again, all caveats that any news spike or any manipulation of news by OPEC could spike this market. But left to its own devices, I think this is a $65 a barrel market.
I agree. And today, I mean, intraday, we tried a short trade with the micros, and we hit our first target at previous day's lows, at Friday's lows, and now we see we've taken those out. I got stopped out on the second unit, but no reason we can't see a little bit of a reversal back down past the low today.
I agree. Nat gas is on a tear. Let's take a look at that.
Oh, yeah.
Talking about energies. We're up 6.5% today.
Yep.
That doesn't look right. Oh, yes, it does. It's a gap, right? We had a gap overnight. Is that what that is, John?
I believe we did. Yeah. Right.
So I don't see it on that on the daily. Look at that. So is that's a rollover. So we must have rolled over. I'm looking at January.
Mm-hmm. Yeah. Yeah.
So that's what happened here. Let's go back to that daily so we can kind of take a look at that. So a lot of times when we talk about a gap, you actually see a gap between the bars. But this is also a gap. You just have to be, a little more observant here. This market closed down here at 3.3 and opened at 3.5. So even though you can't see it on the chart as a gap, that's because we had a big red down candle on Friday, which is kind of interesting. We ended up right back where we were on Thursday, but now it's a new contract. And this contract, Tom, we talked about this before, is usually 20 or 25, maybe even 30 cents higher in the new contract versus the old contract. So the institutional traders, the big traders, seem to see value in this market moving forward because each month going out is higher than the last.
Yeah, that's right. Now, I think this was a true gap in the sense that not just a rollover. If I'm looking at December, and December is right around the same price, it's slightly different. So it is a true gap in the sense that from the close Friday to the open of the session last night, there's a big jump. It was about a 10% jump, it looks like, right?
Wow, that's a giant jump. But again, it goes back to, maybe that sell-off on Friday was more
rotational or yeah.
Yeah, there was something going on Friday. Institutional traders came in, made a big deal about it. Notice that the volume on Friday was about half of what it normally is. So that gold line is the average volume. Friday's volume was very small on a very big move. So I don't know if most of the traders were off that day, and that gave us, that just ended up as a bad day for buyers. But they're back today. The day's, a little more than half over, and we're already at our volume.
Right.
Looks kind of interesting. Let's take a look at the weekly here on nat gas real fast. So there you can see that big seller's wick from last week. But last week was still a green candle. We've had a nice rally the last 3 weeks. And this gap up is, right back to where we were in September. That level, that 3.5 level was pretty good a couple of times this year. We'll see if we can break above it and stay above it.
What's encouraging too, Mike, is the fact that Friday's or last week's wick, I should say, it took out the one from about 2 months prior, which to me is we kind of have this idea that we want to have swing highs and swing lows higher if we're seeing this trend change. Right now, it might not happen on a point like like the low of three weeks ago, but that's encouraging if we're bullish natural gas to see this downtrend kind of swing and start making higher highs on the peaks.
Yeah, it's interesting. The commercials in this commodity are net long, which you typically don't see in the commitment of traders. Normally, most of the commodity markets, most of them you see the commercial traders, the blue line, there's just the commercials. I'm not looking at the other groups. But normally you see these commercial traders, they're net short.
Right.
And but this market has been in such a long downtrend. I'm just going to squeeze this out a little bit here. And typically in commitment of traders, when the market is moving down like this, the traders are getting less short, or in this case, they would be getting they'd be getting more long in this
Right.
case because they're getting long. So here you can see them getting more long as this downtrend starts. And then as we kind of bottomed out here, the commitment of traders was really difficult to get a read on, but this was actually getting less long and sideways. And so that this is really kind of disconnected from the normal commitment of traders analysis. And whenever that happens, you usually are looking at a very long systemic trend as they diverge from any usefulness from the data. We've seen this really nice, again, getting more long here as the market is moving sideways, moving down. So again, there's a disconnect there of why those commercial traders are buying this. And maybe we're going to see that here. Maybe these guys are all super smart, and we're going to see a rally here in nat gas.
I wonder if they're using it for hedging purposes, though. Or are they expecting a downtrend now? I mean, are they expecting, because what I'm thinking is with new administration coming in, being a little bit friendlier to natural gas fracking, for example, or however getting natural gas out of the ground, maybe that's bearish.
I think the dynamic here, the reason that these commitment of traders are long is because they got spooked by these numbers back in April and May. And as soon as we dipped, below kind of that, anywhere below that retracement from up there, they're thinking that this is a good price for nat gas. I want to hedge at these prices, and it kept going lower. Okay, let's keep hedging at these prices until they come up with some average price. And they probably all regretted it in here. Think about it. There's buyers at these two peaks. The commercials are long. Yeah. And so there were people buying nat gas up here thinking it was going to go higher.
Right.
And then they're probably cost averaging. So they realize I don't want to pay that. And we just see them long because they're continuing to cost average and trying to get the best price that they can. It's like, they're chasing lower prices here, but they probably are still not in the best position.
Mm-hmm. That makes sense.
I wonder if I don't know about you, but my electric bill has been kind of sneaking up over the last couple of years. I wonder if this has anything to do with it.
Could be.
How about we shift gears and take a look at crude oil? This has kind of been a sideways market. We're getting back close to 4.1 here. We're at 4.1. We're up 0.5% today. But this was a market that's had some volatility the last couple of months. Let's take a look. It's thinking about it, Tom. Where's my data?
NetGas is like that for me. It kind of doesn't want to leave the screen.
So this is the daily. We were kind of sideways, and we had this bit of a downtrend. Notice all the moving averages at the beginning of this month were all together. That's the 20, the 50, and the 200 all bunched right there. We had this equal and opposite, and then we really saw the beginning of the downtrend as that red candle breaks below all three moving averages. We're below the cloud. And we kind of wicked right down to 4.0, which we would have expected. I would have expected some buyers down here. And now we're just kind of consolidating again, very similar to this pattern over here. If you look back in August and September, kind of a similar pattern, but I'm not sure we're going to see the same rally.
Yeah, I think that that probe down to 4 even is that it's a probe, and the fact that it hasn't taken out the recent high from Wednesday of last week, it's hard to get up there. This does look bearish, even though today we're getting a little bit of a rally. I would think the key level before we get to 4 though is right around that 406. Right there. It's kind of the support of the bodies.
Yes, those are the prices that we saw back here in September.
Yeah, that might be a good place to buy though. So I think it's key in the sense that if it holds, okay, you know what? Maybe we will get the rally. It just had a little bit of a bump to get up there. But if it doesn't hold, I think four even is in play and even lower. I just see this general downtrend that doesn't move in a straight line, right? It kind of plateaus, but hangs out at a level before it decides to move, and then it moves, and then it hangs out at a level, and I just see a downward trend here.
I mean, volume is really declining here. I agree with you. I think that you could get in one here maybe. And if we saw a retracement, lower, maybe to that 4.06 or 4.05, a lot of times when you see a probe like that to 4, there's a second probe before it actually moves. It may not get all the way back down to 4, but I could see maybe even putting on a second unit at 402.
Yeah.
And we might take a little bit of heat on that trade, but I think you could cost average if you were smart about it here. All right. Anything else you want to look at?
Maybe take a look at Bitcoin. Bitcoin's down 3 1/3% today. It hit that 100,000 level on the futures on Friday, and now it's looking more like an equal and opposite candle to Thursday's candle. Today's is. I mean, it got down as low as, under 95,000, which is kind of where we opened on Thursday. And this, sometimes happens at the top where you have a big move up, a little bit of a spinning body or a doji, and then a turnaround. Question is it just a pullback? Is it pullback to the 8-period moving average, or what is that? Is that a 20 on your bands?
That orange is yes, that's a Keltner. It's an 8-bar Keltner.
8-bar Keltner. Okay.
So we're inside of that now. It's the orange line is the 21 SMA coming up there.
Got it.
But this was an extraordinary month by any measure because of the election. But we're still looking for, we're looking for a few down days here at the end of the month and into the first of next month to see if that pattern continues based on, what we've seen and the concept. I think there's some rollover effect here that drives this market down over that rollover. And again, this is a contract that trades monthly. So you've got to, if you're swing trading this, you got to get it out of the current month and into the next month.
Right.
And so there might be some element here. I'm not sure what that would be, but I'm expecting a few down days here. Maybe we could get to 90 before we see the next leg up.
Yeah, I think that pullback could happen early because of the holidays, right? Because of Thursday's holiday and kind of a shortened day on Friday. You know what? If today's the beginning of that pullback, and okay, that means possibly next Monday we wake up and we say we're bullish Bitcoin again.
I agree. So the other thing is that, we've seen an increase in volume here today. We're about halfway there, about halfway through the session. So not really sure. If I look at my 5-minute, we're just slightly below where we should be right now on the big Bitcoin contract. Let's see if I have the micro. Same kind of story here, just below average volume.
But you know what, Mike, what I think of is I look at your look back, and those are some amazing volume days because we were bullish the whole way, pretty much. So if you look back at the last 8 days, I think there was one bearish day in that 8-day mix. I think it was just so much buzz and so much talking about after those two big moves up, we still had a bullish trend going, right? So I think, volume, we're just right at it. It's just kind of this heightened volume for the last 8 days, probably even for the last 3 weeks.
It's interesting. We always kind of look at volume here. There's really two things that I look at, and they're contradictory. One is that you look for kind of blowout volume. Here we see a blowout bottom here, and then the market kind of moved up a little bit. And the other thing I look at is if I see volume, not particularly blowout, but volume that's significantly above the average, a lot of times you'll see follow through the next day. So, when you're looking at the volume chart, that's what you want to look back at historically. Was that a big blowout volume to the upside or downside? Or was that just significant volume hinting that the next session could also be in that same direction?
And I think that's the way it's been. That second case is the way it's been in the last 2-3 weeks.
I agree. I mean, we saw this big spike here, nice big up. That could have been a blow off top. It could have. The thing that doesn't make it a blow off top in my mind is that there's no wick. Very often when you see a blow off top or bottom, like back here, there'll be a big wick in the direction that is going to go. And we didn't see that here, closed near the high. That was a good indication we were going to see some follow through.
Yep.
All right, Tom, thanks for being with me. And thanks everybody for joining today on NinjaTrader Live.
Thanks, Mike. And we'll be back here with bars closing at 3:15.
At 3:15. We'll see everybody there. Have a great afternoon. Good luck in your trading.
The following presentation is for educational purposes only. All the symbols, trading ideas, and market commentary are for educational and demonstrational purposes only and are not recommendations or trading advice. Live sample trading occurs in a simulated environment. Past performance may not be indicative of future results. All the information and content presented is provided by Ninjatrader LLC, and the opinions expressed by all third-party guests are their own and are not necessarily those of Ninjatrader LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the Ninjatrader website.